This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, John Tucker in for Michael Barr as well. An exceptionally busy day. Paul, first we must mention in downtown as well, a remembrance of September 11th.
Yeah, starting at 8 a.m. Wall Street time here this morning, NYC 9/11 Memorial. That event will start at 8 a.m. And then, of course, we'll have some pauses in our programming, pauses in Wall Street trading for the various events from 9/11. 23 years ago, Tom.
Across the tri-state area, good morning. I'm Bloomberg 1130. An inflation report in 90 minutes, exceptionally important. I get the rationalization, Paul. It's jobs, and we're looking at unemployment. Come on, it's still about inflation and disinflation, perhaps, in order.
Exactly. So just a CPI, ex food and energy, 0.2% month to month is consensus. That would be even with last period. And on an annualized basis, which is, I think, how a lot of people think about it, 3.2%.
Do you go to two digits? I can see you.
No, I'm a one-digit guy. I mean, I'll even round. But I know some of the Michael McKee and some of those economists out there will go 2-3 digits.
Maybe we ought to take the digits away. We say good morning to you on YouTube across the nation. Again, subscribe to Bloomberg Podcast, humbled by that growth. Huge August, and we're building out in September. On Apple CarPlay, on Android Auto as well. Good morning, 99.1 FM, the Nathan Hager Network in Washington.
Oh, is that right?
Is
okay,
what that
good.
is. Bloomberg 1130, as I mentioned. And 92.9 FM in Boston. Yep. Good morning as well. David Gura in a moment with our Bloomberg Business Flash from the Interactive Broker Studios. John Tucker.
All right, the major averages pre-market right now, they are all lower. CPI data expected to show a muted gain of 0.2% for August for the headline and core gauges. Probably keep Fed officials leaning toward a 25 basis point rate cut next week. After the debate, shares of Trump media and technology most active pre-market, they are tumbling down 14%. Comes just as the lockout period from its blank check deal is about to expire September 19th. Dow futures down 154. S&P futures down 15. The NASDAQ futures down 65. At West Texas Intermediate crude rebounding a bit after plummeting as much as 5% of the previous session, still below $70 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Below $3 a gallon to fill up this morning.
Wow. Yeah, it's changing. We'll get to some real subtleties, the correlations of the data check. Right now, acclaimed, it was like all-nighters at Cornell a few years ago. David Gura joining us after an all-nighter in Philadelphia. David, what was the spin room like, and particularly when President Trump entered?
Well, before he came in, it was remarkably normal. I mean, the last debate was so strange in so many ways. For one, it took place in this basketball arena on the Georgia Tech campus. Here we were in the convention center, large media filing place, and then you had the spin room floor right next to us. And the surrogates came through. There was no delay in either side surrogates coming out. And then I was talking to Senator Chris Murphy of Connecticut. And while we were speaking, kind of a throng of people ran past me. I could kind of feel the footsteps as they moved past. And indeed, that was when Donald Trump came into the spin room, sat down. And by the time I made my way over to the spin room floor, Tom, it was about 8 people deep. So he drew a big crowd. And I think it's a hard-fought debate here, what that symbolizes. If he just wanted to do it because, as he said, he was obligated to do it, he told some folks he would, or if he felt that the debate performance wasn't as strong as he'd hoped for, and he wanted to sort of have his opportunity to spin the reporters who were there in the room.
So, David, down there in Philadelphia, what was the feeling after the debate about how it kind of played out for both candidates?
We talked a lot yesterday about sort of what each candidate needed to get out of this particular debate. And for Donald Trump, it was to stay focused on his talking points on the issues that his campaign advisors wanted him to talk about. And I think suffice to say, that didn't happen over the course of that debate last night. The vice president baited him over and over again on issues that he's fond of talking about, but his advisors would prefer he not talk about. That had to do with crowd size, had to do with economic analysis by the Wharton School, had to do with abortion and immigration. So I think that it was widely seen as much more successful for Vice President Harris, who, as we talked about yesterday, guys, it was incumbent upon her to introduce or reintroduce herself to new voters and try to get some of those, that small sliver of undecided voters to come onto her side.
David, one more question. What's great about Gura in the kitchen at home, he does have the election countdown clock going. David Gura, 54 days, 17 hours, 54 minutes, and 35 seconds to the election. Is there time enough there for a second debate?
Yeah, this is a great question, one that was hotly talked about after the debate last night. I heard from a number of Democratic surrogates who said, basically, bring it on. We'd love to have another one of these. We'll see if Donald Trump and his campaign accedes to that, but we're looking ahead to that vice presidential debate on October the 1st. This is a very narrow, very short campaign cycle, as you know, just because of what had happened here. So I'll say there is interest from at least one side here, and we'll see if the Republicans, if Donald Trump's campaign comes along with them, Tom.
David Gura with us hourly here from Philadelphia. After the debate, of course, the big take is his major effort here at Bloomberg. Look for the big take out at Bloomberg podcast. Should we do economics, finance, investment? Why not? Let's do it. Why don't you bring in Stephanie Roth to hear 90 minutes from the inflation report?
Stephanie Roth, she's the chief economist at Wolfe Research. Stephanie, thanks so much for joining us here. I think, we look ahead to September 18th, the Federal Reserve. Seems like the Fed is kind of really focusing on the state of the labor market. What is your take on the state of the labor market and maybe how the Fed is viewing the U.S. labor market?
Yeah, I think the market has taken the latest payrolls print and kind of run with this narrative that the labor market is cracking, and I don't think that's the right narrative. So if you look at the sort of the overall picture, we're in a labor market that has slowed down. The latest jobs print was 142,000. There was a whole host of reasons why we had the negative revisions that are unlikely to repeat for the month of August. So we can take that 142 print at face value. So that's a slower than trend number, but not something that's totally falling apart. If you look at measures of layoffs, claims, layoffs from the JOLTS report, we're not really seeing layoffs, something that should be really concerning for the labor market. We're just seeing a labor market that's gradually coming into better balance. So that's how we should be thinking about it. The Fed should be cutting rates, and that they're certainly going to. But a 50 basis point cut is probably off the table at this point because there's no reason to alarm markets, and they haven't prepared the markets for that at this point.
Stephanie, my Bloomberg Launchpad, the correlation of equities, bonds, currencies, commodities, is almost on the edge of screaming at me. Things like the way the yen's moving, oil. I mean, I got under 70 yesterday on Brent crude. There's a global deflation in place. Are we underestimating our crazy housing market, the disinflation that's out there in America?
I think we're starting to see. Well, we've been in a path of disinflation for a while, and I think the market is taking this narrative a little bit too much. So the concerns around real growth that might be tied to the energy and commodity markets, I think that's overstated. If you just rewind a couple months ago, we were concerned about inflation still being too hot and the economy being too strong, and the result is probably somewhere in the middle. And we've just been in this narrative of every 3 months the market narrative seems to shift, partially because of seasonality in the data, and partially just because the market is sort of antsy and worried about recession risk. So I think the deflationary trends that we're seeing in terms of markets are probably overstated, and what we're seeing is inflation running back down towards 2%. And this is kind of what a soft landing looks like.
So are you prepared to kind of just table any kind of recessionary discussion at this point, Stephanie?
To some extent, yeah. I mean, of course, recession risks are more elevated than they were a month ago because we're starting to see further, slowing in momentum in the labor market. But I think it's too soon to be worried about real recession risks, especially because we now have the Fed and it's able to cut. And we're seeing, an easing in financial conditions. The Fed will go faster if they need to. This is an environment that is a good one because unlike a year ago, if we started to see recession risks rise, there was not much the Fed could do about it because inflation was not at their target. Now inflation is back down towards 2%, and the Fed could accelerate the path of cutting if they need to.
Stephanie, too short. We'll do it again soon with Wolfe Research. Stephanie Roth. Can't say enough about her work. Love getting her into the studio as well for a complete view of the U.S. economy. Away to the tape, futures at -15, the VIX 19.40. As I mentioned, oil John Tucker, help me here. Did you say under $3 a gallon?
Yeah, the retail price, some of the off-brand discount gasoline stations.
They thin it with water.
They thin it with, well, let's hope not, or else I'm going to be trouble getting home. I'll be stuck in the Lincoln Tunnel on the way home. But no, it's this big flashing sign as you go down the highway.
Yeah, it's just $2.99.
It's like a billboard advertising inflation is coming down.
Well, it's out there. We'll have the complete report. Mike McKee leading our coverage with our news in New York. Lisa Mateo.
Thank you very much. It was a sharp-elbowed presidential debate as Democrat Kamala Harris, Republican Donald Trump spent 90 minutes battling over abortion rights, January 6th, and the wars in Ukraine and Gaza. The ABC News presidential debate, it began with the economy. Vice President Harris, she touted her plan for a $50,000 small business tax deduction.
My opponent has a plan that I call the Trump's sales tax, which would be a 20% tax on everyday goods that you rely on to get through the month.
And Vice President Harris's comments on tariffs had former President Trump on the defensive.
First of all, I have no sales tax. That's an incorrect statement. She knows that. We're doing tariffs on other countries. Other countries are going to finally, after 75 years, pay us back for all that we've done for the world.
And just minutes after the debate concluded, Harris, she picked up a key endorsement from a pop icon.
Are you ready for it?
That's right. In an Instagram post, Taylor Swift, she said she is voting for Harris, quote, because she fights for the rights and causes I believe need a warrior to champion them. Well, in other news, Hurricane Francine gaining some strength. The National Hurricane Center, it says it expected to make landfall later today over Louisiana. And Southwest Airlines requiring all of its pilots to undergo additional training at its Dallas base after a series of flight incidents this year triggered an enhanced safety review by U.S. regulators. The one-day sessions, they were intended to foster discussions among aviators about specific events and working together as a flight crew to appropriately manage risks. That's according to a company memo seen by Bloomberg. Global news 24 hours a day, and wherever you go on it with Bloomberg News Now. I'm Lisa Mateo. That is a Bloomberg News Flash. Tom, Paul, and John.
Oh, thanks so much. I mean, you look, Paul, where we are. On the market here, what do you see on the launch pad? Now, I see some huge subtleties.
Yeah, just a little bit of a pullback in the equities, Tom, with the S&P off about 0.25%. Same for the NASDAQ. Yields coming in a little bit again. Here we got the 10-year Treasury, 3.62%. And then for, Alex Steele, she follows the energy markets. She's our czar here. We got oil bouncing back a little bit, but still, WTI crude oil, $67 a barrel.
$67.23, wow.
Yeah, that really gets your attention here. So
some other niceties here that are important. Gold, $25.50.
Yep.
And somebody out on Twitter, I'm sorry I can't cite it, good morning, Dennis Gartman, gold in euros out to a new record high. That's the way Gartman looks at it. In yen, and speaking of yen, I'm not ready for a 139 Japanese yen. Damien Sassower called in and said he's on the 19th hole. He can't do it. I got a 141.73 yen down to new yen strength.
Yep. Yeah,
Can you imagine a 139 is not 140 on strong yen?
No, it isn't. So we keep an eye on the currencies here. Tom, the DXY index, a little bit weaker here today against the major currencies here. So the dollar has been a little bit weaker, continues to be.
Yeah, we'll have to see on that. But I really want to emphasize this. Let me go back and, you all know this. I look at the inflation-adjusted yield as a business barometer, whether you're in Boston, New York, Washington, across this nation. The 10-year real yield's a nice benchmark. It's a new number coming down to 4 digits. I'm not making a joke. 159.42. A 159 handle on the real yield. Those people talking about a 1% 10-year real yield, I'm like, yeah, right. That's the vector right now. Please stay with us on this September 11th from New York City. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash on the CPI day. The major averages, they are all lower right now. Bloomberg Economics says August CPI report will likely suggest firms are having difficulty passing higher input prices onto consumers. The report at 8:30 Wall Street time this morning. We'll have live coverage. NVIDIA shares among the most actively traded pre-market. They're down 0.3%. NVIDIA's CEO speaking at a Goldman Sachs conference in San Francisco today. Investors eager for an update on its Blackwell chip rollout, hoping for any catalyst to halt the stock's recent decline. And Trump Media and Technology shares the most active. They're tumbling this morning following the presidential debate. The lockup period from its blank check deal is about to expire September 19th. Dow futures down 151. S&P futures down 13. The NASDAQ futures 51 points lower. 2-year yield 358 unchanged. The 10-year down about 2 basis points. That's at 362. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
Thanks so much, John Tucker. Greatly appreciated. Honored to have with us now from Brown University all of her expertise, truly her wheelhouse, the state of our civility, the state of our debate. Professor Wendy Schiller joins us this morning. Wendy, I got 14 questions. Paul has 12. We don't have the time. It's 70, 80 miles from Milwaukee due west to Madison, Wisconsin. Along that road, who were those two candidates talking to last night?
Well, Kamala Harris was talking to women, particularly on the issue of abortion, but also more generally on the sort of chaotic nature of what a Trump presidency, a second Trump presidency would be. That was her pitch. They are really still in the Harris campaign trying to solidify and shore up enthusiasm among the Democratic base. There is a gender gap between the parties, and in particular, even on undecided voters on abortion. So, spending a lot of time and getting Donald Trump to take credit, wholeheartedly for a long time on the reversal of Roe v. Wade was one of their goals, and they accomplished that goal last night.
Tell me about the effect, which she touched on. I'm surprised she didn't do it more, of admirals and generals coming out making political statements. I mean, these guys aren't Taylor Swift, but admirals and generals, do they carry some weight in what they say?
Well, it's interesting. I think you're right. She probably could have done more with the idea that he would be commander-in-chief, and that, commander-in-chief is of the armed forces, and that there are many people in the armed forces that don't think he should be commander-in-chief. She tried to make that point. It was a little bit late in the debate. But, it's a fine line when you haven't served. Tim Walz served and for more than 20 years, her vice presidential candidate. Maybe he could make that point. But I think it's a little tough if you haven't served. Yeah.
Wendy, where do we go from here? I mean, it was, by all accounts, a pretty good night for Vice President Harris. Where did the two candidates go from here for those undecided voters?
Well, it is always, in the end of the day, a ground game, and even more so in 2024 than 2020 when we had a lot of mail-in voting. Now, people may choose to want to vote in person, and they may not be using the mail-in ballot, in some of these swing states. So ground game and organization is key. You can still register to vote in a lot of places. That deadline has not expired. That is going to be more important, I think, to the Democrats than the Republicans, because they have that sort of Trump wave of enthusiasm that's driving people who voted in 2020 to make sure to vote in 2024.
Down ballot, how should we as voters think about all of the various congressional races across the country? Where are the parties positioning themselves?
When Joe Biden, Paul, it's a great question. When Joe Biden stepped down, it sort of separated the presidential campaign from ongoing congressional campaigns. It freed up Democrats in particular to run more individual races, more state-tailored races. And so they're still trying to do that because really it's a toss-up at the presidential level. They can't really afford to go all in on Kamala Harris. They have to really go local. And that's why it's a little bit unpredictable what's going to happen in the House. You have 10 seats, 15 seats that are really in contestation, but they are in New York and California. And so that gives Democrats a potential edge in claiming back some of the seats they lost in 2022. And the Senate is really unpredictable at this point in time. You've got Trump up in Nevada, Trump up in Arizona, but the Senate candidates are polling ahead of the Republican challengers. So it's really a toss-up there, too.
Professor Schiller, in the time we've got left, I got two themes here. I want to get them both in. They're important. I was shocked at the number of debates in the 50s, even within the Democratic Party debates, just single-party debates, but also in 1960. Is there any value to either candidate to do a second debate?
Tom, if you're the Harris campaign, you want to take the victory lap and don't do this again. Just like Trump did so well against Biden, you have a great debate. Trump had to debate Harris, right? But you have a great debate. You cannot even do better than you did last night. Don't do it again. Trump may want to debate again, obviously, but I think the margin of utility of Trump is probably really little. People know Donald Trump. It's whether they want to see him back in the office of the presidency again or not. I don't think another debate with Harris is going to move the needle on that.
Wendy, the heritage of Bloomberg and what we do at Bloomberg Surveillance and Good Morning Matt Winkler and John Micklethwaite is Paul Sweeney and I really try to keep the politics out of it. But the thing, Wendy, in there that I'm like, you got to be kidding me. You go back to Smoot-Hawley 1930.
Oh, boy.
Or Fordney-McCumber tariff, which my grandfather used to talk about. I mean, Wendy, come on. There is no literature that exists that says that China or Germany or Romania are going to pay a tariff. Am I right?
You are correct. And it's really important to bring back Smoot-Hawley as an example of what not to do to exacerbate any kind of economic condition, because what really sent us into a depression was that bill, and that, it is always much more expensive for the American consumer for tariffs, 1890s, 1930s, and it cost us billions of dollars when Trump had these tariffs in place in subsidies to farmers to pay them for lost product sales in China. So, it is a dangerous tool, I believe, to use sort of as a political or diplomatic weapon against a country, because it backfires on the United States. And Tom Harris was okay on that, but, there was a little bit, not much wiggle room since Biden has kept these tariffs in place for the most part.
Exactly. So if you were advising Vice President Harris, Wendy, what would you tell her about the key message between now and Election Day for her?
She had a good combination last night of particular issues that are on the ballot, for example, in Arizona, abortion, and resonate. She threw in the fact that she was a gun owner. I think that's an important thing in states like Pennsylvania and Wisconsin and Michigan and Georgia and North Carolina, all these states, making sure that people don't believe that she is as left as Donald Trump wants to portray her to be. That is her messaging challenge. And then just retail organizational politics. There are more registered Democrats than Republicans in the country, and whether they can really turn out the vote. And that is the challenge from now until November.
You think about Brown University. I mean, Gordon Wood, Wendy Schiller. I mean, you got to, it's like
serious people.
For all of you, whatever your political affiliation, the professor from Providence, Wendy Schiller, thank you so much. This morning. We got to jump back to the finance, the economics, and the data check here. I am seeing a global deflation trade. Somebody was out, I'll get it in my mind. Folks, they had like 3 hours sleep. Get over it. I didn't shave. This morning. It's the new look.
Solid.
And it's like, I'm all wolf. But Paul, the global disinflation, China deflation trade is in place.
Yep. It feels like, the China economy is slowing. We hear that, and the question, and that's a challenge for Europe, Tom. You think about the European economy. Germany, for example, was such a big exporter of big hard goods to China. That's a challenge for them.
We'll have to see. We've got a lot of coverage here coming up of the economics. That's in 1 hour. We'll get that key CPI report. We'll go beneath the headline data on that and really interpret it over to. And I'm not big. Are you big on the 25-50 beeps thing? I'm not.
I'm looking at the contract rate on a 30-year fixed mortgage dropped 14 basis points to 6.29% in the week ended September 6th.
The 30-year mortgage is 6.29?
Yep, making the 6th straight weekly decline.
And yet the money market fund is still 5.00.
Exactly. So we're getting the rates down. People start maybe refinancing. Maybe some sellers will come into the market. We'll see. We'll
have to see on that. Futures at -15. The VIX under 20, 19.38. The 2-year yield, a wow statistic, 3.58%. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages lower this morning as we await CPI data this morning, 8:30 Wall Street time. Stocks in renewable energy producers rising. They're gaining strength from the presidential debate and Vice President Harris's advocacy of green energy. Donald Trump supported the crypto sector, fueling a pullback in the price of Bitcoin. Mortgage rates sliding to the lowest level since February 2023. The latest contract rate on a 30-year fix dropping 14 basis points to 6.29%. Crude has tumbled by almost a fifth so far this quarter, and after a 5% pullback in the last session, this morning just over 2% higher. And you may soon skip the pimply-faced teenager taking your order. McDonald's inching closer to a future where human cashiers are not necessary. The biggest burger chain rolling out a new format in the U.S. with digital ordering stations that can take cash. S&P futures up down 13. Dow futures down 140. NASDAQ futures down 155. We check the markets for you. What? Like you've ever been to a McDonald's?
No, that's true. A few years
Maybe
ago.
in Europe.
Number 2 value.
Where they
meal.
serve alcohol.
I once went to the Liverpool station McDonald's. I got an email from a fan, Al from New Jersey. He said, I'll bet you've never been to the McDonald's at Liverpool station. There's photographic evidence that I went there and purchased.
I worked for McDonald's
converted.
2 days.
Did you?
Trent, New Jersey. I lasted 2 days as the French fry guy.
They said, Mr. Sweeney, thank you for your
exactly.
tour
of duty is over.
This is a really important conversation. It is so because of the angst, the character of your angst, looking at equities, bonds, currencies, commodities. The Union Bank of Switzerland, UBS, has been very constructive on investment. Jason Drayo's there as head of America's tactical asset allocation. And Jason, it's the when of it. You're talking SPX 6200 up 12%, but mid-year 2025. Why does this bull market not let up?
Ultimately, because we think this equity performance or the economic performance will continue. We don't think we're going to get a recession. We think we're headed towards a soft landing. The economic conditions, the way we think it over the next 12 months, will ultimately be relatively benign for risk assets, meaning growth around trend of 2%, inflation continues to come down, and then you have central banks globally cutting rates. If you tell me those are the macro conditions that I'm dealing with for the next 12 months, that's generally a positive environment for risk assets. So that's the general thesis for why we go higher.
On Standard & Poor's 500, Paul, I haven't done the interpolation over the Dow Jones, up 12%, getting out to June 30, 2025. Jason's talking about an up 16% annualized world. Nobody's really talking about that speed of bull market movement.
No, I don't think so. And so, Jason, kind of what backs up that type of call from the Federal Reserve perspective? Because September 18th, presumably we're going to get the Federal Reserve beginning to cut rates. How do you think that's going to progress over the next, 3, 4, 5 quarters?
So to me, the key thing for the Fed is, they have investors back, so to speak. Like the Fed put to me is there. The commentary we got from Powell, certainly at Jackson Hole, indicating they don't want more labor market weakness. Other comments from Waller last week regarding if the data warrants, is they're willing to be kind of aggressive and front loading it. So the key question to me is what's the criteria they need to sort of pull the trigger and be much more aggressive? So that's why we think 100 basis points this year. Maybe it's only 25 next week, but that we're going to get enough weakness in the labor market for them to move aggressively. To me, it's a bit of a kind of almost a race to the bottom. What happens first? Does the Fed cut rates more aggressively before growth slows sufficiently that investors are really scared? And ultimately, we think they'll be proactive enough that there could be, the next couple of months, questions about, will they be behind the curve or not? But we think ultimately those questions will be answered. Then what you have coming into next year is signs of a bit of a cyclical upswing. Right. Looking at the ISM, you have Fed cutting rates. That's a positive environment for risk assets. So to me, the direction is higher, whether it's 6,200 or not. I mean, you can debate the nuances of that, but to me, the direction is higher between now and next June.
Let's do some Yale macro and fold it into the microeconomic foundations of this global mess, Jason. The basic idea is we can import their disinflation or deflation. Do we misjudge our end result, like getting back to a John Williams 2%, because we are going to import their disinflation?
Well, we will import disinflation, but this is goods disinflation, and we already see negative, essentially goods inflation at this levels. I think it gives us more comfort of inflation going towards the 2%. But given how much the U.S. economy is dependent on services, and the percent that's going to be impacted by goods inflation, this is not, to me, a game changer, but it gives me more comfort that if the rest of the world, particularly China, is slowing and is exporting disinflation, then that gives you more comfort that we're going to hit the sort of the 2% target, or at least a level that's sufficient for the Fed to be relatively aggressive in cutting rates on any signs of kind of growth weakness.
So do you guys at UBS, I mean, not you, but the minions under you, Jason, do you model out a 1.00% 10-year real yield?
I wouldn't say we get kind of that specific. I think what you're kind of asking to me is what is ultimately kind of the proper real neutral Fed funds rate, and whether it is 50 basis points or 100 basis points. It is, I'd say right now it's too high, There's a lot of estimates to say it was 50 basis points. That's neutral. I think it could be higher. I like to look at the 1990s and doing a very crude estimate of from 95 onwards, when the Fed cuts rates, if you just subtract CPI from the Fed funds rate, it was running around 150 basis points for about 3 or 4 years. It's a different economy today, but I think something between that 150 and 50 is probably a realistic assumption.
Jason, in terms of fixed income, I'm looking at the 2-year Treasury now at 3.58%. That's a far move from 5% of a year or so ago here. It looks like the market's already pricing in the Fed rate cuts. What do I do in the world of fixed income today?
Well, we actually think 100 basis points this year, but the market is too aggressive for next year and even in 2026, because I think by the end of 26, the Fed funds rate is going to be somewhere, or even actually by the end of 25, around 2.9%. That implies almost 10 rate cuts. So it's a really aggressive for next year.
Yeah.
So we think that's going to get priced out. So from a near-term perspective, we would say probably not looking to lengthen duration at these levels. We think rates are likely to back up as the economic data proves not to be as concerning as the rate markets indicates. So that's kind of in a very tactical perspective. We think they kind of drift a little bit higher before they perhaps kind of revert to these levels.
Right. One more question quickly here. What's the dollar do, Jason, within your bull market call to June of next year? Resilient dollar?
Direction, we think the dollar goes lower. It's partly that the exceptionalism of the dollar for the past year and a half, that starts to go away. The gap between rates in the U.S. and Europe and other regions starts to narrow. So direction of travel is for the dollar to weaken a little bit.
Jason, thank you so much. Jason Draho with us. Technical Asset Allocation Americas at UBS. That's a heck of a call to put a point on it plus a time on it.
Yeah, exactly.
That's like breaking strategy 101.
Right.
Give me a price level, give me the time, but never both.
Right, exactly. So, talking about it, and one could argue the bull case, obviously, for equities is pretty simple. Earnings are decent to okay, and the Fed is beginning a rate cut. I mean, what else do you need? I guess is
we got to get to the news because YouTube live chat is lit up over your McDonald's job experience.
Oh boy, it was. I mean, traumatic.
We're talking live chat here.
Yes, exactly.
We'll get to that in a moment. Futures at -9 with our news in New York City. Lisa Mateo.
You got it in the first debate between Donald Trump and Kamala Harris in the books. The vice president went after the former president on a range of issues at the ABC News presidential debate.
Donald Trump left us the worst unemployment since the Great Depression. Donald Trump left us the worst public health epidemic in a century. Donald Trump left us the worst attack on our democracy since the Civil War.
Meanwhile, Trump tied Harris to President Biden's unpopular economic policies.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history.
Now, the 90-minute debate, it covered everything from abortion rights to January 6th and the wars in Ukraine and Gaza. In other news, U.S. aviation authorities, they'll investigate a ground collision between 2 Delta airline passenger jets in Atlanta. Bloomberg's Ed Baxter has that story.
The larger plane was carrying 221 passengers and was headed to Asia. The smaller, carrying 56 for a regional carrier operated by Delta. The first reports are that the larger Airbus SEA 350 clipped the smaller plane. The pilot radioed the tower for clarification.
We just hit something on the taxiway. Could you tell us what it was?
No injuries. Passengers were put on different flights. The FAA will investigate. Ed Baxter, Bloomberg Radio.
Now, meanwhile, Southwest Airlines requiring all of its pilots to undergo additional training at its Dallas base after a series of flight incidents this year triggered an enhanced safety review by U.S. regulators. And the MTV Video Music Awards return tonight with a whole lot of Taylor Swift. She leads the nominations with 12. Global news 24 hours a day and wherever you want it. With Bloomberg News Now, I'm Lisa Mateo. This is Bloomberg.
Lisa Mateo, thank you so much. Windsor, good morning, Mexico City, by the way. Good morning,
really?
Worldwide. I was the French fry guy in a McDonald's 60 years ago when we got 50-pound bags of real potatoes. Yeah. Did you actually lug around
absolutely.
real potatoes?
I lasted 2 days. It just wasn't for me, but I was the French fry guy. And it was McDonald's on Olden Avenue in West Trenton, New Jersey, and I lasted 2 days, and I just couldn't hack it, so I hopped back on my moped. I drove. I got a job pumping gas at a Phillips 66 station.
How much was it a gallon when you were pumping?
Oh, buck something.
Yeah, when I pumped it, ready for this, 44 cents a gallon.
Yeah,
I do have a survival tip for anybody who's ever trapped in a car in, some sort of natural disaster. You can just look under the seat and find petrified McDonald's French fries.
Right, exactly.
You will be able to sustain life for weeks on end.
Exactly.
In most cases.
They're well preserved.
Yeah.
Oh, absolutely.
They're still the best fries. I'll die on that hill.
Without a
forever.
doubt.
Yep. So, but I mean, at my gas station, they had a brand new Exxon across the street, a brand new Mobil across the street, bright lights, the latest stuff. My Phillips 66 station hadn't been renovated since like 1950, so nobody came to my station. So I sat there every night from 4 to 9 reading. I read like 3 books a week. I mean, nobody came to my station. It was
And
great.
in Jersey, you don't pump your own gas.
Thank you.
Oh, you don't?
Which is how Paul had that
was
job.
employed. Right.
You
Provided
don't? Is
sustenance.
that still true today?
It's against the law. It's just like you
Jersey
can't-
girls
no.
don't pump their
Are
own
you
gas,
kidding?
right, Lisa?
I
You
kid
haven't
you not.
pumped gas in your life,
I
have
don't
you?
pump gas. No,
Yes. See?
but I can drive stick shift. So
Oh, there you go. That's a whole new. Now that is very solid right there.
Yeah, I'll have to see.
Yeah, I don't
on
know
that.
the history, John. You have to know the history of why New Jersey, and I think is the only state, maybe Oregon for a while, where you have to pump your. Or you
Yeah,
don't
I'd
pump
have to
your
look
gas?
into that. I don't know. It's always like it's the perennial fight in the state legislature to remove that restriction, but
Right.
it always fails. So
Is real estate coming down? I mean, we got the CPI report coming out. Liz Ann Saunders, always with the tweet of the day. She's got an intern from Pepperdine helping out as well. Austin, Texas, median rent is fallen. Ready? 18% year over year. Steepest decline of 33 Redfin major metro areas. We don't see that where we live.
We'll ask Joe
We're the
Weisenthal. He's
ones in
Mr.
a
Austin
bubble.
for us. Exactly. But I just
We're
think
the
some of those markets that had that huge surge during the pandemic, and Austin was right on the front page of that, along with most of the state of Florida, Nashville, and other those markets that really blossomed during the pandemic in terms of people leaving the metro areas. I guess you're just seeing a little bit of a hangover from that.
I wonder if we get I don't have any wisdom on this. I defer to our good guest. And Anna Wong is talking about maybe a tilt to disinflation this morning.
I tell you, you're not seeing that disinflationary rents here in New York City because every day the buses pull into Port Authority with people coming to the city. They want to be in the city. And nothing changes that. It's always been the case, and I don't think it's ever going to change.
Yeah.
As we remember 9/11 and how the city has come back from that, it just every year.
It's 7:43 a.m. Dignitaries begin to assemble downtown. We'll begin our coverage in the 8 o'clock hour of a remembrance of September 11. The futures are -9, Dow futures -105. Small stocks give me some green to help out. 19.22 on the VIX. Bitcoin, got to mention, Alex Steele chastised me yesterday. Tore me to shreds. Tom, you need to quote Bitcoin. 56,000 on Bitcoin. Oil under $70 a barrel. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Inflation data, 8:30 Wall Street time. Economists forecast for today's core CPI reading almost universally locked in at 0.2%. This on a month-over-month basis. Inflation break-evens, they've been falling, leading to the view that price growth is at risk of dropping below the Fed's 2% target. Right now, we have the Dow futures down 104, S&P futures down 8, the NASDAQ futures down 31. The overnight price action generally consistent with the notion that Kamala Harris won last night's presidential debate. Crypto stocks, they are sliding. Shares of renewables, they are rising. NVIDIA CEO Jensen Huang, speaking at a Goldman Sachs event later this morning in San Francisco, could be a stock-moving event when it comes to the AI darling's much-anticipated Blackwell chip. We could get an update. And guess what? Fundamentals apparently matter. GameStop slid after the video game retailer reported second quarter net sales that disappointed. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. The Daily Look at what we do here at Bloomberg Surveillance, always brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading turnkey. Custody solutions, no ticket charges, no conflicts of your interest at ibkr.com/RIA. Thank you, Interactive Brokers, for your support. By popular claim, we will get to olive oil with our surveillance olive oil correspondent, Javier Blas. But Javier, I want to go to something you just had out. You've been so busy here with this interesting collapse in the microeconomics of oil. British Petroleum can't get out of their way. 10 years back with dividends, 3% annual return. 20 years back with dividends, 2% annual return. Javier, with your global expertise, how do boards, how do institutional shareholders let big oil get away with that mediocrity?
Well, that's one of the reasons that big oil was one of the most hated sectors until about 3 years ago. And it was not just because climate change, it was a big factor here in Europe. But the biggest reason that most investors really didn't like big oil was that it has squandered a lot of the riches. It used overspend on the good years between 2000 and 2008. Returns fell. And the fact of the matter was that at one point in 2008, big oil with oil at $100 was making less money on the investment that it was making when oil was at $50. That has changed in the last few years, but with a massive focus on return on invested capital from big oil. But that was the big reason that investors really hated the sector, and many left the sector. It just because the returns were not there.
So, Javier, in a recent column, you point out the risk to big oil here with falling prices. And again, we've got Brent just around $70 a barrel. It was below 70 yesterday. Because that really calls into question their ability to return cash to shareholders, to keep shareholders happy. What is the risk there for big oil and their cash flow?
Well, the main problem is that when prices were at $85, $90 a barrel, everyone could make money. Now we're at 70, it's going to be more difficult to the weakest players to make the money. Big oil has been returning a lot of money to shareholders, not just via dividends, but particularly through buybacks. In some cases, some companies were returning more money via buybacks than they were doing by dividends. I think that those buybacks are in danger, at least the size. I don't think that they will stop completely, but some companies are going to have to reduce the size of those buybacks because prices are coming down. The strongest players, the ones that probably are going to be able to weather the storm, are going to be the American oil companies in big oil, Exxon and Chevron. I think that Shell and Total Energies, the British and French companies are in the middle ground, and BP clearly is the weakest partner of those five.
Javier Blas, Bloomberg News with us in London. Javier, The World for Sale, an acclaimed book, huge response off the Penguin Press. Javier Blas and Jack Farchi with that. Your world, Javier, is meeting in Singapore right now. How scared is the oil world at what I believe is the APEC summit?
Yes, Asia Pacific Petroleum Energy Conference every year in Singapore, 40 years. This year there is the best place to take a pulse of what the oil industry is feeling. I have been talking to people participating, and the sentiment is bearish. A lot of people will say it's all about China. I think that there are two things at play here. One is it's true that the global economy has weakened, and it appears to be weaker as we go into 2025, particularly in China. But I think that the other big problem is that OPEC kept prices too high for too long, incentivized production from every of his rivals, Texas, New Mexico, but also Canada, Guyana, Brazil, and other places. And when oil demand was booming, the growth of oil demand was very strong. That extra oil can be absorbed with relatively ease. But now that things are slowing down a bit, and they're not really, I hear some people talking about oil demand stagnating. We are going to still grow year on year about 1 million barrels a day of oil demand. The problem is that the supply is increasing too much, and everyone is looking at the plans for OPEC to bring extra barrels in 2025, barrels that the market is now clearly telling the cartel that they are not needed if they want to keep the prices at the current level. There is a big problem, and is that OPEC is really confusing the market. It's not really showing his cards for 2025, and financial investors are responding to that uncertainty with a massive sell-off in the financial market for oil. About 100 million barrels over the last few weeks have been liquidated, and that's what has caused the price to drop just under $70 a barrel Brent yesterday. On the price now is recovering, and we are trading just under 71.
What do you expect the American producers to do? America now, for the first time several years ago, is a net exporter of oil. What do you expect the American companies to do?
I think that they can carry producing more oil. The U.S. shale industry in Texas and New Mexico has consolidated a lot and has consolidated towards bigger players with a big role for big oil, including by Exxon. I think that those companies are going to carry on. Certainly I'm not expecting everyone to be investing the same way at 85, and now that WTI is trading just close to $65 a barrel. Right. But good news for some of the American producers is that they have been battling with problems to getting rid of the natural gas that comes along the oil in Texas. Right. Natural gas prices have dropped in Texas to below zero. A new pipeline is coming on the stream on the next few days, couple of weeks, and that's going to really allow some producers to increase output during the last final month of the year.
Javier, nobody cares. All we care about is Javier Blas and olive oil. You got me reading Olive Oil Times, where Spain, because of the elevated prices, they removed the value-added tax. Tunisia's doing some price cap or whatever. To our listeners across the nation and worldwide, including Saudi Arabia, Javier Blas, do we need to get used to these terrible high prices for olive oil?
I have good news. As Brent and WTI are dropping, the price of olive oil is starting to drop. Not a lot. The wholesale market remains tight. The harvest in Spain, the world's largest producer of olive oil, is not coming until November, December, but the harvest look a lot better, better than the previous year. I just came back from my home country, and things are looking good. So we have a couple of months of tightness. September, October are going to be tight, prices high, but coming into December and certainly into 2025, new crop arrive, big recovery in production in Spain, prices will drop. Tom, I bought a bottle of extra virgin olive oil in Spain for €6.50. So that is good news. We were paying double that price.
Javier, I got 30 seconds. Saudi Arabia just won the Dubai olive oil competition. Can Saudi Arabia lead the Middle East to olive oil excellence?
God, you are making trouble with Italy, you are making trouble with Greece, and now you want me to make trouble in Saudi Arabia. Saudi Arabia is a great oil country when it comes to mineral oil. For olive oil, you are better with Spain.
Okay, Javier Blas.
That's a strong take there.
Thank you so much. We're looking for the movie. DiCaprio's playing Javier.
Yes, exactly.
In the movie. I can't say enough about Javier Blas.
Olive oil magnet.
I have seen it at Davos, folks. You're like in a room of 80 muckety mucks. Javier walks in and literally the room goes quiet. I mean, that's the weight the guy carries. Javier Blas, driving all of our hydrocarbon competition, is book-winning every award within oil around the world. Right now on oil, Brent crude $70.64. American oil $67.26. An inflation report in 30 minutes. This is Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Lisa Mateo, Michael Barr. Michael Barr on assignment on the West Coast, recovering from Monday Night Football. John Tucker in today to provide yeoman's duty and assistance. His report on gallon of gas, $2.99, shows you the disinflationary tendency in 29 minutes, a CPI report. Quickly here, Bloomberg Surveillance this morning. Brought to you by CohnReznick Advisory Assurance Tax. Is your business future ready? Talk to CohnReznick's digital advisory team about strategies and platforms to drive competitive advantage. We thank CohnReznick for foundational, original support of what we do here at Bloomberg Surveillance. A hugely busy September 11th. And now with our Bloomberg Business Flash from the Interactive Broker Studios, John Tucker.
All right, Paul and Tom, stock futures dropping, bonds rising ahead of the key inflation report, CPI 830. The question for policymakers whether the data warrants an outsized interest rate cut of 50 basis points. Market reaction to the debate. Vice President Harris' odds of winning the election increasing on the betting website predicted to 56% compared with 53% before the debate. Donald Trump supported the crypto sector, fueling a pullback in the price of Bitcoin. A gauge of the dollar also retreating. As we look at futures right now, the Dow futures down 104 points. That's a decline of 0.25%. S&P E-mini futures, they're down 9. The NASDAQ futures right now, 37 points lower. NYMEX crude up 2.2%, still below 70, 67.21 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thank you so much. Off the debate, Paul Sweeney and I go to David Gura in Philadelphia to move forward, which is what you do out of a debate, all the look back at what we saw last night. David, I want to move forward to the southern border of Pennsylvania, to a small town of well, by census, 197 people, plus or minus 10 as well. The candidates look to Shanksville, Pennsylvania, this September 11th. How do they go there, campaign, and particularly Mr. Trump, but also go where those key votes are in the swing states that aren't Shanksville, Pennsylvania.
Yeah, I'm glad you bring this up, Tom, here on the 9/11 anniversary. And we talked a lot yesterday just about the importance of this state. Both of these candidates recognize that. And Donald Trump staying in Pennsylvania this morning, Vice President Harris coming back here at the end of the week. This is going to be a hugely fought over state in the coming months. And you know, something that struck me over the course of the debate last night was there was no mention of that U.S. Steel, Nippon Steel deal, which is so crucial and so important here. There was a bit of a conversation about fracking over the course of the debate. But I think we're going to see these candidates looking forward here, coming back to Pennsylvania over and over again, recognizing that in this very small assortment of swing states in this country, particularly the western part of Pennsylvania, is going to be extremely crucial as they look for a way forward, a way to kind of navigate that electoral college map to get their way to the White House, Tom.
David, there's some reporting here that former President Donald Trump says he's not inclined toward another debate with Harris. Any thoughts on that or anything you're hearing there in Philadelphia?
You know, it's interesting. After that debate, I talked to Michael Whatley, who's the co-chair of the Republican National Committee. Sat down with him after the debate in the spin room, and he said that he was interested in there being more debates. It's something that he and the party say they'd like to see more of. And then President Trump, when he came into the spin room last night, was saying the only reason that Vice President Harris would want another debate is because she feels like she didn't do well in this one. So he said this morning on an appearance on Fox and Friends that he's disinclined to do it. He doesn't think that there should be another debate. And as we talked about a little earlier in the show, in this very short campaign, looking ahead to just 2 months from now to the election, there isn't a whole lot of time to do this. So we'll see if that's something that the two candidates can agree to. Again, Vice President Harris, her campaign, very interested in having another one. Again, I think capitalizing on the momentum, the success that I think they saw last night here in Philadelphia.
Right. David, one final question. We've got to get to Cam Dawson. She's more important than you. As simple as I can, David Gura, which swing state besides Pennsylvania is David Gura most focused on?
I'm looking at one of the border states. I'm looking at Arizona. I think that's going to be fascinating going forward here. I mean, there's probably 5 or 6 ones that I'm paying close attention to, but I think that state in the Southwest, Tom, is one that's going to merit a lot of attention. Obviously, immigration came up over and over again last night. I think that's going to attract a lot of attention here moving ahead to November. And you're right about Cam, please.
Yeah, he wants
definitely more important than
he wants to play golf in Scottsdale. That's all there is to it. David Gura, Sleepless in Philadelphia, thank you so much for your assistance, also to Balance of Power for their work as well. Joining us now, Cameron Dawson with New Edge, and a really important conversation. We just had a shop-in that not only is modeling out SPX 6200 up and away, but modeling it out to end of June next year. They're vectors like nobody else's vector. What kind of economy market mix do we need to get up 12% in, like, I'm going to say 8 months?
We need to see 12-month forward earnings estimates continue to rise, which means that you have to be able to deliver on what we think are high expectations as you go into 2025. The market has 14% growth marked down, which is based on an acceleration in top-line revenue and over 150 basis points of margin expansion. Getting an acceleration in top-line revenue in a declining nominal GDP environment, or a decelerating nominal GDP environment, I'll say.
Oh, listen to her, math girl.
With, as well,
calculus there, folks,
fading pricing power from corporates, we think that that's a really high bar to jump over. So we're starting to think about 2025 looking a bit more like 2015 or even 2018, where we had these sideways choppy markets. Doesn't mean you can't go up, but it does mean that you probably don't trend as much as you have in the recent years.
Do you believe the Fed, which we believe is going to begin cutting, is doing it because they can or because they have to?
That is the ultimate question. I think if you're looking at the data today, in a snapshot, you could argue that they're doing it because they can. Look at GDP estimates for 24. They just got revised higher to 2.5%. That means GDP in 23 and 24 are running at the same rate. That's pretty strong. Atlanta Fed GDP now is at 2.2%. Hard to say that that is falling off a cliff or a collapsing economy that needs the Fed to bail it out. but it's the direction of travel that matters. And so if you're arguing that they're cutting because they should, it's because you're looking at things like leading indicators about the labor market, the direction of wage growth, the direction of job growth, all pointing lower.
Just, Dawson 101. Can the Fed put a bid on stocks?
They certainly can, but it typically is a lower strike price than a lot of people expect. Given where valuations are today, how loose financial conditions are, it's hard to think that the Fed is in a position where they're saying, we don't want the stock market to draw down 5% or 10%. They typically put a bid under stocks once they've declined far further. It's a be careful what you wish for.
How about on the fixed income side, Cam? I mean, again, yields have come down pretty dramatically. The 2-year from 5% to now we're at 3.58%. Big move in yields. Do I sit in the treasuries there, or do I try to take some credit risk here?
Credit is also priced for perfection, and we're starting to see high yield spreads start to widen out, which suggests that there are now pockets of the market that are having some growth fears. Look at the ratio of high beta stocks versus low beta stocks. That captures growth fears as it's breaking down. Look at equal weight discretionary versus equal weight staples. That shows growth fears. So credit, you need to tread carefully.
Is this like New York Fashion Week or something? We're going to have Cam Dawson get up so Lisa Mateo can sit down. It's like, it's like we're doing a show at Rockefeller Center or something.
Bryant Park.
Bryant Park, excuse me. Okay. Cam Dawson, thank you so much. Too short a visit. Can you come back? Can we get, Eric, can you see on Cam's day calendar if we can get her for 2 blocks at some point, before the election? I mean, like when we hit 6,200, that'll be good. Cam Dawson, thank you. Thank you so much this morning. Futures -8, sort of listless here. We're 20 minutes away from this key inflation report. And I'm not going to mince words. House to house, there's some incredible nuance in the guesstimates. I mean, like Jan Hatzi has some guy on the 14th floor, desk 4, going, what are airplane tickets actually doing? That granular. And there's a lot of hard work going into this. Paul and I are just looking at round numbers.
Of course.
3%, 2%. Yep. These guys are killing themselves, slicing and dicing that. With that, good morning to David Rosenberg in Toronto, Rosenberg Research, of course. David Rosenberg really inventing the modern slicing and dicing of inflation. With our news in New York City, Lisa Mateo.
Well, at the first meeting between Kamala Harris and Donald Trump, the ABC News 90-minute debate. It covered everything from abortion rights to the wars in Ukraine and Gaza. Harris tried to get under Trump's skin about the crowds at his rallies.
You will see during the course of his rallies, he talks about fictional characters like Hannibal Lecter. He will talk about windmills cause cancer. And what you will also notice is that people start leaving his rallies early out of exhaustion and boredom.
And in discussion on immigration, moderator David Muir fact-checked Trump in real time about a conspiracy theory that migrants in Springfield, Ohio, had eaten people's pets.
There have been no credible reports of specific claims of pets being harmed, injured, or abused by individuals within the immigrant community.
Well, I've seen people on television.
Let me just say here, this is the
people on television say my dog was taken and used for food.
Well, following the debate, Vice President Harris challenged former President Trump to a second one. On Fox News, Donald Trump said he's not up for it because, quote, I won the debate by a lot. In other news, we are learning more about the negotiations over a ceasefire between Israel and Hamas. Bloomberg's A.B. Morris has details from Washington.
Israel says it proposed giving Hamas leader Yahya Sinwar safe passage out of Gaza in exchange for returning the hostages and giving up the Gaza Strip. Israel hostage envoy Gal Hirsch said in an interview in the Bloomberg News Washington bureau that he's, quote, ready to provide safe passage to Sinwar, his family, and whoever wants to join him, and that Israel wants the hostages back and a new system that will manage Gaza. He reiterated that Israel would also be willing to release prisoners it holds as part of any deal. Hirsch tells Bloomberg he put that offer of safe passage on the table a couple of days ago. He declined to characterize the response so far. In Washington, Amy Morris, Bloomberg Radio.
And Hurricane Francine gaining strength. The National Hurricane Center says it's expected to make landfall later today over Louisiana. Global news 24 hours a day and wherever you want it. With Bloomberg News Now, I'm Lisa Mateo, and this is Bloomberg.
We have in the room where we were watching the debate last night. I usually don't watch them, and I just thought last night would be so interesting. I actually did. I'm proud to say good morning to Pendleton, Oregon. We have the Pendleton dog beds. Okay.
Pendleton dog beds.
You need the White Glacier National Park dog bed. It's a huge value. The dogs love them. And there's one for, Vet Bill over there and one for Kennel Fee.
Yep.
They started in on the pets last night.
Uh-oh.
Vet Bill, the older brother, gets up and goes over, and he never is on the Pendleton with Kennel Fee, ever. And they're like quivering over in the corner.
Yeah.
I mean, it was,
How much will this dog bed set you back?
Well, she wanted the Tiffany one. And we didn't get the Tiffany Pendleton bed. It's a certain blue.
Yep.
We didn't do that. But
all right.
There are reasons. We get them for
I didn't
cheap.
I didn't think the debate was going to go in that direction, but there you go.
There did. I mean, it was. Good morning, Ian Bremer. He was
all the issues out there in
Mr.
the world.
Bremer with Dr. Bremer with some, important Eurasia Group insight on what we saw. But the moose was terrified. I mean, the moose. It was something to see. And the dogs are in recovery right now. They're doing fine. Futures at -7. Here 15 minutes away from a CPI report of import. The 2-year yield, 3.59%. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages are modestly lower right now. Among the most active, shares of NVIDIA. Investors eager for an update on its Blackwell chip rollout. CEO is going to be at an event in San Francisco today. Could be market moving. They're up slightly pre-market. Also, most active shares of Trump Media and Technology shares. They were down about 10% pre-market, lower following the presidential debate. The lockup period from its blank check deal, that's about to expire on September 19th. Starbucks' new CEO, Brian Nichols, says he plans to redouble efforts to improve the company's physical locations. This is digital ordering has radically altered the way the coffee chain does business. By the way, coffee now so expensive, farms are becoming crime scenes. Fascinating story on the Bloomberg this morning. Food and drink have become lucrative targets for criminals. Rising prices, the cost of living crisis, sparking a string of thefts of everything from African cocoa beans and Spanish olive oil to ham and donuts. You heard Javier say the harvest for olive oil should be pretty good. Anyway, the S&P futures down 7. NASDAQ futures down 20. The Dow futures down 123. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. We are commercial-free across the nation, around the world, here on an exceptionally busy September 11th. We will have a remembrance at 8:46 a.m. of Flight 11 and the North Tower or something. Paul, what is it, 23 years?
23 years.
Thank you.
23 years, absolutely.
23 years. We'll look to that after the CPI report. We have that in 12 minutes. The jobs day was extraordinary. And so we turned to our vast booking team, even with the interns gone back to college, and we said, do it again. They did it again. Constance Hunter will join us here after the 8:30 report. And we are absolutely thrilled to have with us one of the great minds. Willem Bouter was driving the ship with Professor Mann at Citigroup a long time ago, Catherine Mann now at the Bank of England. And one of them just said, shut up and get Rahbari. And joining us now, formerly with Citigroup, is Ebrahim Rahbari, who has been greatly missed on Wall Street. Thank you so much for joining us here. Let me just get right to your academics. The disinflation and presumed almost true deflation of China, how will that affect Americans?
Well, I think first of all, it's great to be back with you after a little break. But I think you point to a really important change in the debate. I think a lot of people have emphasized that the Fed has shifted focus from inflation towards growth. But underneath that, there's actually a lot more, I think, attention on downside risks to inflation. If you look across the board, really, inflation expectations, which Chair Powell once again emphasized in Jackson Hole, have been soft and are now back to clearly pre-pandemic levels, maybe a little bit before. Commodity prices and oil prices are collapsing, and the actual inflation data has been sufficiently soft that maybe pre the great inflation, the Fed would have thought of it broadly at target. CPI at 2.5% year on year. In the past, we thought of that as roughly around target inflation for the Fed. So I think the significance of your question comes from the context. China is imparting a disinflation shock to the world when actually the risks to inflation are now, broadly speaking, including for the US, to the downside.
Back to your academics at Oxford, where microeconomics molded into macroeconomics is frankly multi-decade, even centuries gospel. What are the microeconomic foundations now of supply and demand of goods, services, and I guess just productivity out there? What are those micro dynamics of our macroeconomics in this disinflation?
Well, the big shift that we'd seen in the US, but globally, was that inflation went from being almost entirely demand-driven for a little while and generally soft. I mean, supply was helpful, but nevertheless, I think a lot of emphasis was on demand. The great inflation had a big supply element. I know there's still a lot of debate. We saw that debate at Jackson Hole. We saw it in Sintra. But it's clear that supply took on much more significance. I think now we're back to a world where demand is back in the foreground. We've seen demand soften.
Really, a shift.
So it's not to the full exclusion of supply factors, but we see this in all the company announcements. We see this obviously in continued disinflation and deflation in goods prices. Certainly demand is taking on a much more of a role, and that's what hands the ball back to the Fed at the end, because they obviously work through demand.
Well, then what do you expect our Federal Reserve to do beginning September 18th and then maybe through the remainder of the year?
Yeah, so I think that's obviously the big question of the day for markets, and I think it matters a lot more than the question between 25 and 50 would indicate, because markets will have to price the whole sequence of steps, and it will indicate what sort of further easing steps in size the Fed has in mind. In practice, I think it's going to be a 25 basis point cut in September, but coupled with a projection that they're very much ready to take more decisive steps in the future. And if anything, it's actually easier to make the case for a 50 basis point cut at this meeting. The risks are clearly to the downside, so the balance of risks points to a more decisive step. But also simply the fact that at a minimum, the Fed is planning to ease by 100 and 150 basis points, so it might as well get on the way.
I do that with Jess. Let's talk about two ex-Citigroupers. Catherine Mann would say you're nuts. She would say, Ebrahim, shut up, put a cork in your mouth. Nobody's going 50 beeps. Why is Dr. Mann and people like Dr. Mann suggesting that's too abrupt?
And in fact, in the end, I agree with her. I think it's the context that will pull the Fed towards a 25 basis point cut. But the two critical factors that get you there is this is a really uncomfortable moment for the Fed. It's the first cut ahead of a contentious election, and the Fed hasn't really prepared anybody for a potential 50 basis point cut. So the timing is really what I think tips the tips the balance for me. When you take a step back, it's really, for a lot of people, the scarring effect, and it's the difficulty of changing your mind so quickly when we've talked for the last 3 years mainly about central banks being behind the curve and bringing inflation back down. I think that's bygones. I think Chair Powell historically has been very proactive. So I think with that context out of the way, which we will have as soon as the November meeting for the FOMC, I think it'll be very easy for them to be decisive and proactive. This time around, he has to get the rest of the committee on board. So I think 25 basis points this time around, and project we can do 50 as early as November.
The European Central Bank, the Bank of England, the Bank of Japan, how close are they monitoring what we're going to see from the Fed on September 18th?
Very closely. And I think it does have relevance for all of them. And in the end, it will pull all of them in a somewhat more dovish direction. Now, we have the ECB tomorrow, and the ECB has what I would call fear of forward guidance now. So they're going to try as hard as they can to say absolutely nothing about their future decisions. But we have a very interesting question for the ECB, because unlike the other central banks, it's really the following policy meeting that markets are trying to grapple with. And the question is whether the ECB could quote-unquote follow the Fed in moving away from a quarterly easing cycle to something which is at every meeting. I think that'll be the case, and I think a dovish Fed message could prepare the grounds for it. But I think even for the Bank of England and for the Bank of Japan, obviously in the case of the Bank of Japan, they're hiking. The Fed dovishness will make them less keen to
There's
step
a
out.
whole belief out there that they're going to revert to what I'm going to call a Greenspanian measured. Your former bank, with Andrew Hollenhorst, has been brilliant about we're going higher. And now the basic theme from Citigroup is sequential measured rate cuts. I see Europe trying to take a different approach. With all your global work, Ebrahim Rahbari, is measured dead, or do we just revert back to the Greenspanian convenience of a quarter point?
I think I side with measured is less relevant again. And the case is pretty simple. Rates are very high by recent illustration, and all of these central banks, except the Bank of Japan, of course, agree that their rates are very restrictive. So in that environment, if you have high policy rates and the balance of risks again points towards much bigger downside risks than upside risks, it makes a lot more sense to be decisive. And there's a large body of work too that says if you're decisive early, it actually may mean that you have to do less overall and over time. So I think we will go back towards more decisive measures. And again, I think the Fed will lead, the ECB will follow, the Bank of England, you never quite know, it falls somewhere in between. But I think the broader theme will be we are going to see pretty steep rate cuts across the world.
5 minutes away, make it 4 minutes away, Paul, from this inflation report. Ebrahim Rahbari with us now, formerly with Citigroup Economics.
So, Ebrahim, what do we do in the currency markets here? We've had the U.S. dollar kind of fall 4 to 5% from recent highs against major currencies. Where do you see value out there in the currency market if most central banks are in fact cutting rates?
Yeah, so I thought the currency markets are always tricky, but you ended up with making my life a little easier. There's an obvious place where there's still value globally, and that's the yen. Okay. And I think people have latched onto it, but we're looking across assets at a world where finding value is difficult. Finding value in defensive assets is even harder, and the yen stands out in that regard. And if you're a highly levered hedge fund investor, it's a little hard to take a long yen position when it's fallen, when dollar yen has fallen, the yen has risen so much so quickly. But for a medium-term investor, the yen is still by far the best place to be in currency markets. If you want to sleep really soundly, being long the yen against the renminbi is probably where you can sleep forever soundly. Okay. But I think the yen would really be where you find value.
I got 1 minute here before we get to the report, and even we want you to stay with us to get your initial reactions to it. We had a one-off jump condition in inflation off the pandemic. What's the Rahbari timeline out to get to the glide path out to diminish that, diffuse it?
Great question once again. I think cyclically we're looking at, I think fast falling inflation will be at target by early next year. But I think there's a time limit on that. I think structurally we are looking at a high inflation volatility world. So inflation will be more volatile. I think over time we'll see a rebound. But for now, I think inflation is going to fall pretty fast.
Ebrahim Rahbari with us. He'll stay with us. Constance Hunter to give us a perspective on GDP. And of course, Atlanta GDP. Now, I haven't looked at the number recently, but talking to us about a 2% real GDP. Let's go through the data. When I walked in this morning, Paul, and Paul, I want you to jump on the CPI data to expect here in 2 minutes. But the data that matters is a Sweeney yield, 3.57, is flat out stunning.
Yep.
And the 2-year yield, 10-year yield, 3.62%, 30-year bond under 4%. And the real yield, wow, 1.59% in 2 basis points this morning. I mean, that's a huge move off 30 days ago as well. Paul, the CPI numbers, which one sticks out to you?
It's going to be, I think, you look at the CPI ex food and energy, trying to just get to the core here, what this economy is doing. And the expectations are for, on a month-to-month basis, 0.2%, Tom. That'll be kind of right in line with what we've seen recently, certainly right in line with last month as well here. So, I mean, that's just, I think the market's just looking at the data today. It's a little bit of a confirmation that, in fact, inflation is moderating, has moderated, and will likely continue to moderate, which will allow the Fed, again, to kind of focus on the growth side of the mandate.
Like the jobs report, I will look at also prior revised, and we'll have to get that. That comes out a little bit later here. We welcome all of you across the nation driving to work, Apple CarPlay. Good morning. Android Auto, bigger and better than ever. Good morning. Across all of our radio services on the East Coast, the corridor, if you will, 99.1 FM in Washington, Bloomberg 1130 here in the tri-state area, and of course, Bloomberg 92.9 FM in New England as well. In Boston, we all say good morning to you. Worldwide, we're on YouTube. Subscribe to that. You're out of the car, get to the office like Constance Hunter. She's got the 53-inch screen. She's living large. You get the YouTube up there. It's in Technicolor as well. Subscribe to Bloomberg Podcast as well. So we're going to get the CPI report, hear from Dr. Rahbari, and then we will speak with Constance Hunter here about inflation coast to coast. Here is the CPI report. Coming out promptly as well, Sweeney nailing it. Just absolutely on survey. There's no other way to put it. I would note year-over-year hourly earnings with a little bit of a lift there, Paul, in the wage inflation. We'll have to get the revisions. Don't have that yet. Equities go south, negative 22 on equities. In yields, I'm going to say they churn, but they work a little bit higher. Paul, what do you see?
Yeah, Tom, as you mentioned, just kind of right in line with expectations. CPI, the headline number month to month, 0.2% gain, right in line with expectations. Ex food and energy up 0.3%, a little bit higher than the consensus of 0.2%. On an annualized basis, CPI ex food energy annualized 3.2%, again, right in line with consensus and right in line with what we saw last month. Again, so we'll wait for the revisions, Tom.
Yeah, year over year, my headline is a tangible wage lift, which gets into the real wage as well. All of our economic indicators, the leadership of Michael McKee there. Our economic indicators are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors, a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. I guess, Ebrahim Rahbari, it's on plan, and that's all great for inflation. We got to wait for the revisions. But we have a buoyancy in wages. It's tangible. That's not disinflation, is it?
Well, we've actually seen a moderation in pretty much all measures of wage growth. Unit labor costs have, in fact, been very low because productivity growth has been pretty resilient as well. So I think even when you look at wages, you can't really find inflationary risks of reigniting inflation. It's a little bit above target consistent wage growth, but nothing to worry about there. And if anything, I think the Fed will continue to worry about downside risks now.
And Ebrahim, just quickly, I'm just reading some of the top live reporting from Bloomberg News. The higher than expected core inflation rating is going to be a problem for the 50 basis point Fed rate cut scenario for next Wednesday. So maybe a little bit higher core takes that off the who knows?
Yes, exactly. I think the market worried actually about a low reading coming into this morning, and I think something broadly in line with expectations, slightly above. It doesn't quite seal, I think, the case for a 25 basis point move first, but I think it makes it a lot more likely.
At the heart of the matter, and this is away, I should say, from today's report, is the number I look at, the ECI year over year, the Employment Cost Index, which is a blend of wages and benefits. It's just flat out not back to pre-pandemic. End of discussion.
But we don't want it to go back to pre-pandemic levels. So we economists complained, and obviously society at large, for many years that wages weren't keeping pace, that living standards weren't keeping pace. So I think the point here is not so much whether wage growth is back to pre-pandemic levels, it's whether inflation is. And if wage growth is a little bit higher, that's actually probably a good thing.
Okay, Ebrahim, thank you so much. Greatly appreciated today. Ebrahim Rahbari with us on this inflation report. We turn to Constance Hunter that's grilled at MacroPolicy Perspectives and Y equals C plus I plus G plus NX. Let's go to the debate last night and fold in here the state of this inflation report and how it affects consumers.
Yeah, so it's the shelter index that's really causing the problem, right? We're up 0.5% month over month. That's close to 5% year over year, 5% on an annualized basis. And this is where the worry is. Of course, there is a very strong argument that if we lower rates, that's actually going to help unlock some of the stuckness in housing, right? We don't have a lot of transactions. People are rate locked in their mortgages, so they're not selling their homes. There's limited supply that's pushing up prices. That's leading people to interpret the OER at a higher level. So, but I agree with Ebrahim. Look, this is a 25 basis point cut environment. It is not. It is unlikely they will move 50 basis points. And the hysteria around an intermediate cut that happened in August is well behind us.
Lizzie and Saunders with a chart of Austin, Texas, with a basic plunge in rents. And I mean, in every metro region is a different story. But Constance Hunter, the delusion here is Fed policy can look at subsets of inflation. Is there any literature that says they can be successful doing Fed policy, looking at this or that part of inflation?
Yeah, you bring up a good point. And so, yes, you're correct. They're not going to, historically, we wouldn't think of the Fed influencing specific subsets of inflation. However, coming out of the pandemic, we're in such an unusual situation that that housing is in this unique place.
So we step back here and we've got inflation moderating. What's your call on the U.S. consumer these days? I mean, I guess we hear lots of data from companies in the reported earnings about some folks are really struggling out there, whereas other folks, I guess maybe who own stocks or bonds or real estate are doing okay. What's your call on the U.S. consumer?
Yeah, I mean, we're seeing it, that bifurcation that we often have and that we have in the U.S. And certainly it's helpful that lower income groups got a boost in wages through the pandemic. But of course, they're most impacted by price increases.
Constance Hunter with us here, and we'll continue this discussion. Troy Gayeski scheduled to be with us. Sometimes it takes tragedy to make a nation come together. This is an extraordinary image now. Downtown, Paul, let's step in with this with Senator Schumer on the left and Vice President Harris speaking with him, and then President Biden, and then Mr. Bloomberg. I should mention that Michael Bloomberg is the owner of all that we do here on Bloomberg Surveillance. And next to Mr. Bloomberg, Mr. Trump as well. After this debate, Paul, an extraordinary scene to see on this September 11th.
I guess when I'm looking at this image here, as you mentioned, members of all parties there, and it's just a time of togetherness, which you like to see, and that is certainly happening down there at Ground Zero in Lower Manhattan.
This 23rd Remembrance, we'll give you coverage on that here in about 10 minutes and on through the day. I believe Mr. Trump traveling to Shanksville, Pennsylvania. Paul and Alex Steele will have that for you in the 10 o'clock hour. I should mention that the senator from Ohio, Mr. Vance, standing next to Mr. Trump as well this morning. An extraordinary scene for those of you out on YouTube and for those of you on radio. I can just say it is, Paul, as you mentioned at the top of the show, a perfect day in New York City.
Yep, absolutely a perfect day today. Just reminds you of the day back 23 years ago in terms of just the weather and everything. You walk outside and you just know it's that time of year, and it makes you think about it.
We continue with Constance Hunter, MacroPolicy Perspectives. Constance, my great theme for the year, and I would say back 18 months, is corporations adapt. And I think we've seen that in a bull market. I haven't looked even with the market carnage here. I haven't even looked to see what year over year or year to date SPX is. Oh, that's terrible, Paul. SPX 1 year trailing up 22%. Constance Hunter, corporations adapt. How will the American economy adapt post-pandemic?
Yeah, well, so I'm also now with the EIU, the Economist Intelligence Unit, as their chief economist. And of course, we cover 200 countries globally. And what I think is so interesting, if we look around the world, the stickiness of services inflation is global. And so what is that about? That is about the bounce back from the pandemic. And so, therefore, we think about what is that stickiness is because people didn't participate in goods and service in services activities, and now they're bringing that forward, whether we're talking about travel, eating out, concerts, medical services. And so we see this everywhere from Chile to Europe to the US. It's a global phenomenon, and that is the long tail of the pandemic still working its way through the inflation statistics.
Constance, thank you so much for joining us. A hectic day, to say the least. Constance Hunter with MacroPolicy Perspectives. We'll get much more from her, particularly to that key Fed meeting that we see. But is it September 18th? Is that
September 18th.
On the edge of close there. Futures are negative 17. Markets churning here on this day of an inflation report on target. Joining us here for a quick 5 minutes, is Troy Gayeski, Chief Market Strategist with FF Investments as well. Troy, you got to write a memo coming off of September 30 to reset for Q4. What's your major message?
Well, I think the major message from an economic standpoint is when you look at the U.S. consumer, you were talking about it before with your prior guest, the labor market has moved from white hot to red hot to warm. And that is good news from an inflation standpoint, because there is no possible way we could ever get inflation under control if we still had 2 job openings for every unemployed person. So the consumer is not as strong as they were. The excess savings has been run down. Obviously, the labor market's no longer white hot, it's warm. But that unto itself does not precipitate a recession, right? When you combine continued labor market growth with the consumer's propensity to consume, with a very strong business fixed investment CapEx cycle driven in large part by tech and energy needs, it still appears to us that recession risk is very low, and the Fed is going to be very, very patient lowering the front end, and the new terminal rate is right around 3%, which probably means the yield curve needs to steepen from here, and the back end is priced to perfection. And then if you flip over to equity markets, there's nothing necessarily to fear from a revenue or earnings standpoint. The issue is valuations. You have growth at either unreasonable prices or at least very high prices. To your point, corporations adapt. The American corporate entities are incredible at that. It's just, you have less upside going forward than you've had since October of 22 based on valuation alone.
So, Troy, what does that mean just as we think about equity markets here? I mean, I think a lot of folks are wondering about, is the AI trade played out? Do I need to think about other sectors to maybe lead this market higher? How do you think about that in the equity space?
Yeah, so there's been an incredible amount of thought put into various factor trading, right? Whether it's quant shops or fundamentally based shops. And, the cautionary note there is, as you know, why do you own equities, right? You own equities for growth. Where are you getting growth? Obviously in tech predominantly, but also in the select handful of pharmaceutical companies. So trying to play sector rotations and catch-up trades is very, very challenging. I'll say, for instance, in our multi-strategy fund, it's something we pursue, but the probability of success we have there is not as high as more straightforward expressions like dividend futures or yield curve steepeners. So we're not big fans of people dropping tech to grab value just because valuations have expanded. And these days, there's so many other choices for investors, whether it's in private credit or middle market private equity or in the hedge fund space. There's no reason to be overly obsessed with this concept of sector rotation and trying to delude yourself into timing it perfectly.
Troy, too short a visit. The news flow today, extraordinary. Troy Gayeski will do this again longer. Please join us in our studio. Mr. Gayeski is Chief Market Strategist, FS Investments. Paul, 22 years a remembrance downtown. It is the same every year, and it's as difficult every year.
It is, Tom, and I think especially for folks in the various areas that were directly impacted, whether it be Washington, D.C., Pennsylvania, or of course Manhattan, just brings back some very severe memories. And one of mine, I was at Credit Suisse First Boston, 24th and Madison Avenue were our offices.
Yeah.
A lot of us standing outside on Park Avenue watching the folks from Lower Manhattan walking uptown, just away from the area, and they were covered in soot and dirt and debris.
Including our Michael McKee.
Including Michael McKee, absolutely reporting from downtown.
And Michael McKee, of course, leading our coverage of this inflation day. There is a difference this year in the midst of a presidential election. The vice president attending, former President Trump attending, along with former Mayor Bloomberg, Senator Schumer, I noted, and President Biden as well here. So it is I tell you, an election after what we saw last night. I mean, it's really remarkable imagery to see there. For those of you on YouTube, we capture the moment. For you on radio, it's just as simple as you can. You have seen this before. This 23rd remembrance of 9/11. A data check here as we go to a moment of silence, a wait to the tape here off the inflation report. And again, we welcome all of you across the nation. Let us listen in now before a first moment of silence.
Broad stripes and bright stars through the perilous fight, o'er the ramparts we watched were so gallantly streaming, and the rockets' red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
From New York City, we say good morning to you in this moment of silence. This is Flight 11. The saddest part for me, Paul, 1, 2, 3, 4, 5, 6 moments of silence through the morning that we will see here. Again, a ringing of the bell with President Biden in attendance.
Right, quick, march.
The citywide moment of silence being held in Lower Manhattan to mark the moment that the hijacked Flight 11 struck the North Tower in Lower Manhattan. Again, in attendance, President Biden, Vice President Harris, former President Trump, VP candidate Vance, and Michael
In
Bloomberg.
attendance on an election. Can you send me a memo when this gets easier?
Exactly. Just
Please let me know when it's
So we've got the, looking at some of the fife and drum folks down in Lower Manhattan from the NYPD also playing right now.
It'll be interesting. An interlude in this presidential election. We say good morning to all of you on YouTube. Please subscribe to our Bloomberg podcast page there. It's been almost as big a success as Oddlots. I mean, we're sort of on we're on the edge of what Joe and Tracy are doing. We're not there yet,
I am
We're
shocked
getting
at
there.
the advertising support for the podcast industry. As somebody who's followed the media industry for close to 35 years, I didn't think the advertisers would be this supportive, and they flocked from network television from 15, 20 years ago. We're talking Ford Motor Company, Coca-Cola, Omega Watches. They're now supporting the podcast industry. It's just extraordinary.
You know, Tracy, I went to Tracy when we decided to do this digital experience. I said, what do I need to do? And she said, you got to get a subscription to Digiday and read Lucas Shaw cover to cover every week. Joining us now in our studios here on this important day of inflation and what the markets are doing, futures negative 17. Joe Weisenthal and Tracy Alloway is well this morning. Good morning, the two of you, on the 23rd anniversary of this remembrance. And as I said, I'm waiting for it to get easier as well. Joe, your thoughts on this September 11th?
I mean, obviously, looking at the extraordinary images, kind of a wild moment in U.S. politics right now, and we see Trump
to see them
and
lined
Biden.
up, extraordinary.
Extraordinary.
Yeah.
Obviously, I guess I watched the debate last night. First debate I've watched in a while. That was something. That was interesting. And then to see Trump and Biden and Kamala Harris and J.D. Vance all there at 9/11, kind of an extraordinary couple of days here. And an extraordinary moment, I guess, in the economy, as there's so much uncertainty still. We have this Fed decision next week, and they still don't know exactly what's going on yet.
Tracy, your thoughts here as we dive into the if we assume not another debate, into really the rush here to October and the first Tuesday of November.
Well, I think it's interesting that there are issues where there actually seems to be a decent amount of bipartisan consensus, and one of those has to be trade and China. And in fact, in an episode we released on Monday, we spoke with U.S. Trade Representative Katherine Tai, and some of the stuff she said was extraordinarily reminiscent and perhaps even repetitive of the rhetoric around China that you heard from Trump in the early days of his administration.
But this is really important because Katherine Tai, folks, even for those on the political side opposite her, there's a huge respect for our trade representative here. I mentioned this earlier with Wendy Schiller, which is the oddest thing I saw last night was a revision of 1920s, 1930s tariff history. What did the trade representative say about the efficacy of 1920s, 1930s tariff strategy?
Tracy?
Oh, well...
Tracy was the one who gave us a history lesson on the podcast.
Well, so one thing I thought was really interesting is if you look at what Katherine Tai has been talking about in terms of economic history, the one thing that comes up over and over again is something called the ITO, the International Trade Organization, which was a failed FDR attempt to basically create a trade body out of Western allies. So countries with shared values about human rights and worker standards and things like that. And I asked Ambassador Tai, I said, you keep talking about the ITO, how literally should we take this? Is this, an actual attempt to perhaps come up with a competitor to the WTO, or is this about the values embodied in this international organization, which again never got off the ground? She kind of evaded that question. She's very good at talking in generalities, but still I think it's interesting that that's the one historic parallel that she keeps bringing up.
And Joe, what do you think, speaking with Trade Representative Tai, is the strategy with China, should it be one of engagement or should it be one of stepping back and relying on tariffs and so on and so forth?
You know what I think was actually, to connect it to the debate last night in this moment, I thought one of the most interesting things was, there's all this concern about Trump's tariffs policy and people talk about inflation. It's very striking, and he said this, and I thought it was one of the interesting points, like, you didn't reverse the tariffs under the Biden administration. And I think it sort of defangs the attack somewhat because you see all this like, oh, it'll be so inflationary. Well, if tariffs are so inflationary and bad, we've just, coming on 4 years of the Biden administration, we've only seen them expand during this administration. Maybe they'll expand further under a Harris administration. Maybe they'll expand further under a Trump administration. But it is really striking that one thing we don't get the impression of, this does not seem to be a temporary change in the policy. It does not seem like there is some switch that China is going to flip at some point and they're like, all right, let's go back to late 90s, early 2000s unfettered trade. So to your point and to your question, this really does feel like, I guess what I would say, at least probably for the, I don't know, decades to come, a sort of new normal with respect to how we engage China.
That's the key phrase, decades to come.
Yeah.
I mean, are we embedding ourselves into a debate a la the blockism of the 20s and the 30s, or can we have a movable short-term American feast where we quote-unquote change China? Is there any indication that China needs to or wants to adapt?
Well, I think so far what we've seen is still and I don't really understand why, but a commitment to export-led growth from China. Like, we haven't really seen major efforts to kickstart consumer demand, to, I don't know, pay some attention to the concerns of other countries. In fact, when Canada unveiled its new tariffs on Chinese EVs last week, you saw China immediately respond with anti-dumping charges against Canadian exports. So they're still very much in that tit-for-tat mindset. But the other thing that I think is interesting is it's not limited to China. And in fact, Ambassador Tai talked a lot about NAFTA, and she was kind of complimentary for the USMCA, which was a product of the Trump administration. And she gave full credit to the Trump administration for the USMCA, talking about maybe trying to equalize trade between the US, Mexico, and Canada.
And specifically to that point, she talked about the rights of Mexican workers. And so one of these modes of globalization is like, okay, countries may be able to bring manufacturing or develop by having cheaper, worse conditions and cheaper labor. And she was talking about a race to the top and the idea that workers all around the world could organize for better conditions.
We don't care. The reason you guys are here is a photo of the weekend was Joe Weisenthal and the Texas Longhorns in Ann Arbor, Michigan. What's it like to sit in a stadium with 111,000 other people?
So I went with my 5-year-old son. We went to see the Longhorns play the Wolverines. I hate to say this. You know, I went to UT. The Michigan fans are so friendly. I wanted a little hostility,
You wanted some Texas
like a little
Aggie.
bit like an England soccer game. You feel a little tension.
I don't think you want an England soccer game.
They were so friendly to us as the two people in this section wearing burnt orange. I wish there had been a little more drama.
One of a great photo, Joe, of a perfect autumn weekend in Ann Arbor, Michigan. The right team won, I'm told.
That's right.
Mr. Weisenthal briefed me on this. We say good morning to all of you, and for you to know that Bloomberg Surveillance is brought to you by Interactive Brokers, their bond marketplace Access, their vast selection of over 1 million global fixed income securities, no markups or built-in spreads, and at Interactive Brokers, low, transparent commissions. Learn more at ibkr.com/bonds. To the two of you, thank you. Odd Lot's killing it out on Apple Podcasts. Look for that, as Paul said. I mean, they you know, we have, Odd Lots or whatever, Big Lots or whatever, advertising. They've got Bentley. And,
I know.
The rest of it.
Yeah, very solid.
Futures -12. That's sort of a ho-hum off the CPI report, Paul.
Yeah, absolutely. I mean, I think the market is now just debating, Tom, does this report take 50 basis points off the table for the Fed September 18th?
From this New York City on September 11th, stay with us. Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. He's on sabbatical on the West Coast this morning. We say to him, good travels. I think he's like Napa Valley, you know. He's doing like the wine district.
Good for him. Good for
him. He's being sensitive. Sensitive Michael Barr. He's doing that this morning. We welcome all of you after a CPI report. It was key. We welcome all of you across the nation. Thanks for the comments out in the live chat of YouTube. This September 11th. We greatly appreciate your attendance here. Honored. We'll go to David Gura in a moment after a remembrance at 9:03 a.m., 2 minutes away, Paul, which we'll get to in a moment. But the answer is, and let me start, Paul, with you. All of a sudden, as you said, unexpected, there they were. Harris, Vance, Trump, former Mayor Bloomberg, and President Biden.
Yep, absolutely.
At the 9/11 remembrance.
Absolutely. Former Mayor Bloomberg standing between Biden, Harris, and Trump and Vance, but a nice show of bipartisan unity in Lower Manhattan at Ground Zero.
Really something to see. We'll get the really expert opinion of David Gura on this in a moment. Let me do a data check here because we do move forward. The market's always moving forward. Futures at -3, a little bit of green. NASDAQ goes green here suddenly. Maybe a little bit of a slide here, 30 minutes away from a market opening. The 10-year real yield's what I pay attention to, and that's at a 1.60%. A little bit lower earlier, but nevertheless, the yield's churning here. The Sweeney yield up a big 6 basis points. 50 basis points, Paul, just went away. I mean, can we say that now?
It feels like it.
Maybe we can't editorialize that, but we would do. I think we would do that. We had a moment of silence at 8:46 a.m. and for all of America, 9:03 a.m. is another shocking point of a South Tower. Let us listen now to the reading of names at the memorial.
Never disappear. We love you and thank you.
Migrant.
A moment of silence on this September 11th. And also joining now the dignitaries, Mayor Bloomberg, former Mayor Bloomberg, I should say, with President Biden, Vice President Harris, Senator Schumer, and over on Mayor Bloomberg's left, former President Trump, Senator from Ohio, Mr. Vance, and Mayor Giuliani showing up, which is a good thing, his leadership there in that transition between Giuliani and Bloomberg. Just one vignette, 10-year anniversary. And what got me through it with Michael McKee, who lived this, was Paul Simon. Paul Simon, now 82 years old. He went down and played the 10th anniversary. And just to see him get through that was something. Why don't you bring in our next guest who's going to... Oh, we're going to go to David Gura. Paul, why don't you go to David Gura in Philadelphia with the lineup, the set of dignitaries we see on this September 11th.
Just extraordinary, Tom. David Gura is still in Philadelphia, the site of the debate last night between Vice President Harris and former President Donald Trump. David, there's been a few hours here to kind of look back on this. What is kind of some of the consensus that's forming about maybe how the debate is going to maybe inform this electorate as we head towards Election Day?
Yeah, Paul, I'll say first, you're spot on talking about the show of unity that we're seeing there at Ground Zero, seeing Donald Trump there with J.D. Vance and seeing Kamala Harris there along with former Mayor Bloomberg and former Mayor Giuliani. So I think an important moment and a marked contrast to what we saw last night in kind of the political crucible here in Philadelphia. I mean, it was an open question with those two candidates shake hands on stage here in Philadelphia. Indeed, they shook hands there at Ground Zero. So a point and an important moment, and I'm glad that you've marked and noted that as well. Look, I think both campaigns here are saying that they won this debate last night. That's not to be unexpected. Vice President Harris clearly happy with the performance that she had last night on that debate stage in terms of talking a bit about policies that she previewed in the run-up to it, particularly on the subject of the economy, and also being able to kind of goad or needle former President Trump into responding on some issues that his advisors didn't want him to talk about. For his part, former President Trump feeling similarly, that he was able to show that he would represent something different than this current administration. But to your point, Paul, about where things go from here, we're going to see them kind of capitalize on what momentum they seem to have from this. They're going to get back on the campaign trail very quickly, heading out west in former President Trump's case, and to the south, North Carolina, in Vice President Harris's case before she comes back here to Pennsylvania.
David, September 11th was an attack on a nation, and that brings up a commander-in-chief. The generals and admirals making public comments. To me, it's unprecedented. Am I right?
It is unprecedented, and Vice President Harris was very keen to mention this a couple of times during the debate last night, the support that she's gotten from kind of unorthodox figures. She has a lot of support from Republicans and a lot of support, Republicans who've served in office, I should say, and a lot of support from the military as well. This has been something that the campaign has really tried hard to marshal and to emphasize on the campaign trail. But there are many people who served under former President Trump who think it would be a grave danger for him to be in office once again. It's novel territory, as you say here, Tom, and something, again, that the Harris campaign is very eager to highlight and to make known to the electorate.
Ben Hodges out on Twitter here in the last coming days, the former general of Germany in infantry and tank warfare. Blame for Afghanistan failure cuts across 20 years, both parties. David Gura, thank you so much from Philadelphia this morning. We welcome all of you on YouTube across this nation and worldwide, particularly in the evening of your Pacific Rim. Good morning to you, and of course, across this nation. Our favorite is here, Gina Martin Adams, absolutely nailed with Bloomberg Intelligence. The earnings uproar we've seen. Cam Dawson was in earlier and said she's modeling, she said the street is modeling 14% earnings growth out some term. What does Bloomberg Intelligence see? Double-digit earnings growth?
Oh, easily. I think we can get double-digit earnings growth, in particular if we keep seeing some recovery in financials and a recovery in healthcare. I think one of the things that I think goes underappreciated is just how much healthcare in particular was a big drag on the earnings numbers. It is one of the larger sectors. It did produce more than 20% decline in earnings in 2024 or early 2024. It's starting to turn the corner. That makes for very, very easy comps. The other key is going to be what happens with commodity prices. Energy and materials were really big drags on earnings this year. Will they recover into next year? And can we keep stable earnings growth in tech, which seems to be the case? So double-digit earnings growth is not abnormal. That's more of a return to normal. I think that's the first point to make. We will likely see somewhere between 10 and 15% earnings growth over the course of the next 12 months.
Tom nails it with the wow, because don't we have an economy that's slowing?
Well, I think this is a really good point, Paul, and something that I think we've dug into a lot. We put another note on the terminal today about this. There's a misperception out there that the economy and earnings growth are a one-for-one relationship, and it just doesn't work that way, in particular because of concentration, especially in the S&P 500. The economy and the Russell 2000 are much more closely connected, and you see that. It's very evident. The Russell 2000 has really struggled to produce much by way of earnings growth. But the S&P 500 is producing double-digit earnings growth because these are the biggest, most dominant companies with the strongest pricing power. They're benefiting from relatively high inflationary conditions, and they're benefiting from the mix that exists inside the index.
I mean, let's be honest here. Gina needs the new iWatch 10. I mean, the big black, fancy, shiny whiz bang. When you sit in a room, not a bar, when you sit in a room, with Mandeep, Anurag, and the 14 other people driving technology analysis here, can the what do they call it, the Mag 8 with Berkshire, can they, Bank of America is not a tech stock, can the Mag 7 keep it going? What's the theme of your bright people?
Yeah, the theme really is, can they continue to post extraordinarily strong earnings growth with mandates for very strong spending? So it really became a spending about a story about their spending path over the course of the last quarter or two.
Their spending path,
how
or the
much
industry's
will they?
spending?
It's both, but it became a story of margins, and that's the change that occurred over the course of the summer. Is will they be able to continue to sustain very strong margin growth in an environment where they themselves have to spend a whole heck of a lot of money to sustain their development path? Now, we think that they're generally very, very sound. They're very high quality. They're very high ROE. They're very high margin entities, and there's not a ton of risk there. But you got to the point over the summer where the market was anticipating perhaps a little bit too much from these companies.
Okay.
And so you're in this waffly period
Paul,
right now.
Like EBITDA. Okay, I know people listening are going to go, don't use EBITDA. Gina Martin Adams doesn't use EBITDA. That's what I got, folks. Go with me here. Down the income statement, Microsoft's EBITDA margin is going to crater, I say, from 55%, 55 cents on the dollar to 53 cents on the dollar. It's an outrage.
Yeah,
it's going to tank.
It's an outrage. All right, let's say I want to look for some value out there. There is value out there. Is that a value trap, though?
Okay.
Or do I try to really look for value because I've missed the Mag 7?
Yeah.
I'm not going to chase it.
Look, there are always value traps in the market. Let's start there. But not all of value is a value trap. And I think that the trick here is looking for where can you find value with an improving path for cash flow or earnings growth. And there are areas in the market where there's tremendous amount of value with an improving path and improving momentum on the earnings lines. They're not in the commodity sensitive segments right now. That's the area where you are most at risk of entering into some kind of a value trap unless we can get some momentum in energy prices globally, in materials prices, mining prices, mined metals prices. We're just not going to see a lot of improvement there. But there's a tremendous amount of value in communications now, in some of the healthcare space, in some of the financial space. All of those are starting to show some sort of earnings momentum improvement.
Bill Smead
and that's a very different story.
Bill Smead was in 97th percentile, 3 years, 5 years, whatever, killing it in value. And right now he's long energy because everybody hates it. What does Bloomberg Intelligence and Javier Blas, how's he say Saudi Arabia? He's got that Saudi Arabia. I can almost do it. What do you say about energy when you synthesize what Javier Blas is doing with what your team's doing?
Yeah, so it really all comes down, for energy, it really all comes down to still what is the price of oil. And that's the number one macro factor that drives energy stocks specifically, even though we're in the midst of this very big long-term transition to alternative energy sources. The price of oil is still the single strongest signal for earnings growth for the energy space. The fact that oil has lost all momentum, it's been sort of stagnant. Can you explain?
I brought this up earlier. British Petroleum.
Yep.
10-year per year, 3% per year. 20-year track record with dividend reinvestment, 2% per year. How does a company like that stay in business?
That's
I don't
a good
get
question.
it.
Yeah,
I
that's
don't
a
get
good
it.
question. It's not the same story as your Microsoft margin story, is it?
No.
Yeah, it's a very good question. It's a completely different business model, and when you model these out, it's why you have a persistently lower price to book for energy companies than their ROE. So it's persistent.
Okay.
There's a persistent discount there. The trick in finding the value in energy is to find when the discount is abnormally large relative to its normal discount, and you've got an earnings momentum.
We got 1 minute. John Mickle tweeted out with a wonderful note the other day on a huge anniversary for Bloomberg Intelligence, which Paul Sweeney invented. What was it like in the early days of Bloomberg Intelligence?
Well, it was David
It was
Dwyer.
like you and a Rolodex, right?
David Dwyer, Drew Jones, Allison Williams, a handful of people. We got the support of senior management, Beth Mazzio, Tom Secunda, to build this research department, because at the time Wall Street was really just starting to really pull back from some of their research commitments. And so the smart people at Bloomberg, Tom, they saw an opening there when people were kind of zigging. Bloomberg was going to zag. And this was 2009, coming out of the great financial crisis, when it was tough to find businesses that were investing back into their businesses. But Bloomberg, true to its form, its history, was doing it, and that's kind of where we came from.
Gina Martin Adams, thank you so much. Greatly appreciate it. This morning with Bloomberg Intelligence driving their equity coverage. And somebody asked here, and she's not on speaking terms with Ira Jersey and fixed income, but hey, that's, like every other firm as well. Red and green on the screen with our news in New York City, Lisa Mateo.
Good morning. The nation pays tribute to those who lost their lives in the worst terror attack in U.S. history.
Gordon M. Amoth Jr.
Edmiro Abad.
At Memorial Plaza in Lower Manhattan, family members of the victims, they read their names one by one at the National September 11th Memorial and Museum annual ceremony. It paid tribute to the men, women, children killed in the attacks at the World Trade Center site, the Pentagon aboard Flight 93, as well as those who died in the February 26, 1993 World Trade Center bombing. In other news, the ABC News presidential debate, well, it's in the books. Democrat Kamala Harris, Republican Donald Trump spent 90 minutes battling over a number of issues. Vice President Kamala Harris touted her plan for a $50,000 small business tax deduction.
My opponent has a plan that I call the Trump's sales tax, which would be a 20% tax on everyday goods that you rely on to get through the month.
Well, Vice President Harris's comments on tariffs, it had former President Trump on the defensive.
First of all, I have no sales tax. That's an incorrect statement. She knows that. We're doing tariffs on other countries. Other countries are going to finally, after 75 years, pay us back for all that we've done for the world.
And just minutes after the debate concluded, Harris picked up a key endorsement from a pop icon.
Are you ready for it?
Yes, in an Instagram post, Taylor Swift said she's voting for Harris, quote, because she fights for the rights and causes I believe need a warrior to champion them. Well, today, Trump casually dismissed Swift's endorsement, telling Fox News he prefers the support from Kansas City Chiefs quarterback Patrick Mahomes' wife, Brittany Mahomes. And since we're talking Swift, yeah, she's up for 12 nominations tonight's MTV Video Music Awards. No word if she plans to attend. Global news 24 hours a day, wherever you want it, with Bloomberg News Now. I'm Lisa Mateo. This is Bloomberg.
Lisa Mateo, thank you so much. We welcome all of you on YouTube. The imagery of the day, the September 11th, we're going to have a New York Stock Exchange and NASDAQ moment of silence here in a bit. And we'll bring that to you. Jeffrey Cleveland will be with us with Payton and Rigel. Always important with the West Coast perspective, which I really, really like outside the zip codes. I am thunderstruck, Paul, at the two affirmations of double-digit earnings that we have seen today from Dawson and Martin Adams. Boy, it doesn't feel like that out there, but that's what the pros are saying.
That's what the pros are saying, and it's as Cameron Dawson and Gina Martin Adams were saying, it's a lot of margin improvement out there and it goes to your point, Tom, where companies adapt, and they adapt in the short term, and they adapt in the long term, and maybe that's what we're seeing in some of the earnings.
Yeah, we'll see that now, and we'll go into earnings season for you ending September 30 with lots of activity into the near October 1st area. We welcome all of you on YouTube. Please subscribe to Bloomberg Podcasts. Shocked at the growth. Just in August, it was like, you're kidding me. Great. Thank you for subscribing to Bloomberg Podcasts. Really humbled by the statistics that Google gives us. In your car, before you get to where you're going to watch it on YouTube, Apple CarPlay, Android Auto as well. Good morning, 99.1 FM in Washington, and Bloomberg 1130, our flagship station here, always Bloomberg 1130 AM in New York, and 92.9 FM in Boston as well. Paul, on the energy front, I think Gina was lukewarm there, but I'm sorry, $70.27, up $1. We may get Brent fixed at a 69 or lower. That's shocking.
It really is, Tom. I mean, and we're talking to Javier Blas earlier, and just talking about the global supply and demand dynamics. It's just leading commodities in general, including crude oil, lower here. Mike McGlone, Bloomberg Intelligence, thinks it's going even lower.
Yeah, well, we'll have to see. Good morning to Edward Morse, formerly with Citigroup, who absolutely nailed a lower oil price. No one did it like Dr. Morris. A moment of silence is as Manhattan and global Wall Street picked up the pieces on September 12th. It is the New York Stock Exchange and the NASDAQ as well, the NASDAQ at Times Square with the scrolling people. Let us listen to a moment of silence at the New York Stock Exchange. Part of the fabric of New York City, a moment of silence at the New York Stock Exchange here on September 11th, 23 years on. It was amazing, Paul. My recollection is a day off. The nation survived through the weekend.
Yeah.
Was it Monday? Go back to work.
Yeah, go back to work. The New York Stock Exchange opened up, which again for global Wall Street was such a sign of resilience. And it kind of came to, I think really be one of the symbols of kind of the rebuilding of lower Manhattan, which again is still, it's effectively completed now. You go down to lower Manhattan and it is just spectacular how they've rebuilt lower Manhattan with the World Trade Center back up. We have that single tower, which is extraordinary. The Memorial downtown, Tom, is a must-see for anyone who comes to Manhattan. You can make a day out of it, but I certainly, when any of my friends come in from out of town, I certainly recommend going down there. It's extraordinary.
Joining us now to keep us on economics, finance, investment, Jeffrey Cleveland, 50 basis point or 25 basis point economist in Payne and Regal. Jeffrey,
Good morning, gentlemen.
We don't editorialize here, Jeffrey, but 50 basis points walked away this morning, didn't it?
Yeah, I don't know if you hear that sound. I can hear it on my end. That is the sound of the door slamming on the 50 basis point rate cut talk. I think that's done. I think we've solidified the 25 basis points. And please, I just want to stop talking about the 25 or 50. It's been seemingly every day for the last few weeks. I think we're coalescing around 25.
How far away is the Fed from a Taylor rule normal?
Well, it depends. We're using a modified Taylor rule, Tom. We're using a lot of inertia in that Taylor rule because we think the Fed is a somewhat inertial organization. So that does tie into the 25 basis point view. I think you can build a case, though, that by the middle of next year, you need to get a handful of 25 basis point rate cuts in there to be consistent with a Taylor rule based on our expectations. Built into our version of the Taylor rule is what we expect for inflation and what we expect for the unemployment rate, to simplify things. And we're a bit more optimistic, as you know, out here on the West Coast. So we think the unemployment rate will be right around 4.1% at the end of this year, maybe drifts up a little bit into the middle of next year, but it will still be quite low. And so that's a big factor. We also think, and as evidenced this morning, with that 0.3 versus a 0.2, I mean, it's 10 basis points, I know, on the core CPI month to month, but still it tells you things are a little bit stickier. There's a little bit more underlying inflation, and that has to feed into your Taylor rule thinking as well, Tom.
Hey, Jeffrey, real quickly, what's your GDP call here? How much is this economy slowing, and is it a cause of concern for the Fed?
I think we're in a growth scare, Paul. I think we do this from time to time as investors. You get the downward revisions to payrolls. You get a weak payroll reading, as we did in July, and people start talking about recession. Right. And so they start marking things down. We're still 2.4% for this year, Q4 to Q4. So we still think the consumer has spending power. So we're still pretty upbeat there. So yeah, maybe we've slowed a little bit. I think you see the evidence for that in payrolls, but not a major slowdown. Yeah.
Jeff, I got 30 seconds. Is LA going to pull off the Olympics? Come on, Joan Payton, Sandra Riegel, you guys are foundational LA like the Amundsons, Capital Guardian Trust, the rest of you guys. Are you going to pull off the Olympics?
Yes, LA will pull it off. I can still remember sitting there watching that Rocket Man blast off in the '84 Olympics at those, I don't know if it's the opening or the closing ceremonies, but that image was etched in my mind. So we've got 4 years to do it. We need to clean up the traffic situation, but I think LA will pull it off.
Jeff Cleveland, thank you so much. Payton Riegel, too short. Everybody's too short today. I mean, it's just,
just a lot going on.
There's just a lot going on. And it's just, everybody's too short. We apologize for that. We'll get their good thoughts in with Jeff Cleveland, just incredibly optimistic view of the American economic experiment. We'll get that to a longer conversation here in a moment. I'm going to say a resiliency to the tape, red and green on the screen. VIX under 19, that's key. The VIX 18.27 shows a better tape this morning. From New York City, this September 11th. This is Bloomberg Surveillance on YouTube, Android Auto, on Apple CarPlay. Good morning, Washington, New York, 92 FM in Boston.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash as we wait for the opening bell. Futures all morning long and pretty much mixed. Traders have been backing off a jumbo rate cut this month from the Fed after the inflation data this morning. Core consumer price index rising 0.3%, just a little more than expected. And out of the gate, the Dow Jones Industrial Average lower, down 154 points. That's a decline of 0.4%. We're at 40,573. The S&P 500, 3 points lower at 54.91. The Nasdaq Composite Index, that is higher, up 0.2%. That is up 33 points right now. As shares of NVIDIA, they are on the move today, right now up 1.8%. The CEO speaking at a Goldman Sachs event today. Investors will be listening for any update on the company's Blackwell chip. And after the debate, shares of Trump Media, 14% lower right now, among the most actively traded. This comes just as the lockup period from its blank check deal is about to expire on September 30th. So mixed for the major average in the early going. That is the opening bell report. I'm John Tucker. Paul, Tom.
Well, John, thanks so much. Down on 226 points here as we open for trading. Liz Young-Thomas, always wonderful. Great perspective on the left coast. Liz Young-Thomas, this is Paul stunning. Shelter is a big driver, was responsible for 87% of the month-over-month increase in core inflation.
We've heard that before, haven't we?
87%. Wow.
Yep.
Let's slice and dice this now. This is a 3-hour conversation we're going to squeeze into 6 minutes. Anna Wong joins us in a running clearly for Economist of the Year with her wonderful work on employment revision, the birth-death model, and such. Anna Wong, if you said goodbye to a 50 basis point cut, Alan Meltzer would say, everybody calm down.
Yeah, I think we are still hanging in the balance. Well, if before the CPI we are hanging on a balance, the CPI report did nothing to tip the balance. I think in this report we do see some kind of mixed evidence in support of 50 versus 25, because most of the upside surprise in core CPI came from simply two things, which is lodging and airfares. And airfares does not enter into core PCE, not the one that the Fed cares about. So I think that without the airfare surprise, we would be at consensus at 0.2 for the core CPI.
And given the economic data that we've seen over the last several weeks, would you expect the Federal Reserve to kind of move in a, steady, predictable 25 basis points every meeting or every other meeting kind of cadence, or do they need to do something different?
I think the underlying tone of the data is that the Fed needs to do something more drastic in order to stabilize the economy. But it's very unfortunate that the data has required a lot of nuanced read. For example, today's CPI report, if you drill into the details, you'll see core goods disinflation has been going on for the past 12 months, even though freight prices has risen sharply since the past 6 months, which suggests that firms are taking a hit on the profit, which portends that layoffs will be coming due to the slowing revenues and profits. So I think that it's unfortunate because the optics of the upside surprise to core CPI is also not conducive to a big rate cut in a very politically charged environment right ahead of the November election.
So, again, we step back here. Is the U.S. economy, from your perspective, is it in a solid, yet maybe we know it's slowing, the economy, but is it still in a reasonably strong growth phase?
No. If I were to try to square all the circle, the productivity data, the GDP, GDI, employment data, I think the most coherent picture I can make of it, and this requires factoring in the downward revisions likely for GDP and jobs, is that job growth is basically flat or negative in the past 3 months. And the American people are screaming in pain. They need the rate cuts. Yeah.
Anna, what will you publish on? I think the very quickly here, we only have 30, 40 seconds. What is the next thing you're going to write about? What is the next research item you're focusing on?
I'm going to be writing about how November 1st will be the most consequential payroll data for the year, because it will reset market expectations on hard versus soft landing.
Love that. Anna Wong out front with her research at Bloomberg Economics. Can't say enough. Michael McDonough, shout out. I mean, yes. Anna Wong and Michael McDonough, they don't talk.
Nope.
They just they have to put them in different buildings. But we're doing some great graphical representation at Bloomberg Economics. Really, really informative. Advanced, like Uri and Timmer at Fidelity.
Sure.
Sort of like,
solid stuff there.
It advanced stuff. There are images to September 11th, and one of them is at the Pentagon. It is always formal, and I can see sitting behind the podium right now the Secretary of Defense, with his service in Iraq, in Afghanistan as well. Some have said are forever at wars. He was the head United States Central Command, 12th Commander, I should say, of Central Command, and any number of other services as Vice Chief of Staff of the Army as well. But Lloyd Austin, no doubt, to give comments here on a moment of silence that we will have in 1 minute on Flight 77 at the Pentagon. I can only say, flying into Reagan, into National, that the remembrance artwork, sculpture,
in the airport,
is extraordinary.
Yep.
Just nice extraordinarily successful as well. On a day of many remembrances, this one of Washington, we say good morning to all of you riveted to Bloomberg Daybreak in the morning at 99.1 FM in Washington. It is your moment of silence here on a most difficult day for America. Again, at the Pentagon, the Secretary of Defense, I believe, scheduled to speak now as we await the moment of silence. With the dignitaries, the admirals, and the generals in attendance, let us go to Washington for a moment of silence.
You stood heroically on behalf of the wounded and the hurting. In your precious and holy name I pray. Would you please join me in a moment of silence in remembrance of the lives lost on that very minute on September 11th, 2001.
The dignitaries turn in Washington to the flag at the Pentagon, including General Austin, our Secretary of Defense. He's been quite ill. He's had really quite a difficult year. Lloyd Austin there to make comments as well with the employees of the Pentagon. Here for a moment of silence on September 11th. Red and green on the screen, the NASDAQ a fractional lift. Away to the tape, futures at -19. Dow futures at -373. With our news in New York City, Lisa Mateo.
Thank you. Today, as you've been hearing, remembrances taking place nationwide and marking 23 years since the September 11th attacks. At Memorial Plaza in Lower Manhattan, dignitaries, presidential candidates, the loved ones of the victims gathered where the Twin Towers of the World Trade Center once stood. The ceremony paid tribute to the men, women, and children killed in the attacks at the site at the Pentagon aboard Flight 93, as well as those who died in the February 26, 1993 World Trade Center bombing. In other news, the first debate between Donald Trump and Kamala Harris in the books. The vice president went after the former president on a range of issues at the ABC News presidential debate.
Donald Trump left us the worst unemployment since the Great Depression. Donald Trump left us the worst public health epidemic in a century. Donald Trump left us the worst attack on our democracy since the Civil War.
Now, meanwhile, Trump tied Harris to President Biden's unpopular economic policies.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history.
The 90-minute debate, it covered everything from abortion rights to the wars in Ukraine and Gaza. Hurricane Francine gaining strength. The National Hurricane Center says it's expected to make landfall later today over Louisiana with damaging winds, life-threatening storm surge, and torrential rainfall. It'll move northward into Mississippi tonight and tomorrow. And Southwest Airlines requiring all of its pilots to undergo additional training at its Dallas base after a series of flight incidents this year triggered a safety review by U.S. regulators. Global news 24 hours a day and wherever you want it with Bloomberg News Now. I'm Lisa Mateo. This is Bloomberg.
Lisa, thanks so much. Greatly appreciate that this morning. Everybody today's been short. We've said out to all of our guests, one more question. Ted, this length of this duration of time with John Authors.
How good is that?
I mean, it's like the clouds have parted and the sun has shined down. He's so damn British. I mean, Oxford, Sussex, the rest. What was your first day at Belmont School like? You fly into Boston, and you're this English twerp. Everything's hockey, and field hockey, and that. What was your first day like at Belmont School in Boston?
Well, I didn't fully understand the significance of this at the time. My actual host of the family I stayed with in Belmont, the son was a few months later would be picked in the first round of the NHL draft.
There you go.
He actually never got to play in the end. He was drafted by the Flames. He got as far as what's it called, the IHL. He never actually played on the ice in the NHL. But I met all these university coaches trying to come around. Anyway, so yes, that was a very interesting, very informative experience. At that point, Reagan had just been re-elected, and the morning in America vibe was palpable. It felt as though
the Red Sox were still losing. What was it like with the death of James Earl Jones, who John is completely codified in America by the movie Field of Dreams? What was it like the first time? I mean, you guys are English Premier League, and it's like gospel and 80,000 people.
Yeah.
And what was it like the first time you went to Fenway Park?
Okay, well, the first time I went to Fenway Park, I am very excited to say I actually saw Carlton Fisk hit a home run for the White Sox, to whom he had moved at that point. I thought that they call it Friendly Fenway. It's obviously been yupped up very nicely since then. It was a very exciting place. Roughly speaking, I've had 20 years of Red Sox fandom, the first half of which was we're cursed, we're doomed, and the second half of which has been surfing on the glories of what happened in 04. But
this is based off the philosophy you studied at Oxford and John Kelvin and all of that. John, I look at your output, and everybody on Global Wall Street glued your work with Lex, the Financial Times, what you're doing at Bloomberg. But I think I've got to jump condition as to the Starmer experiment in London. What does our American audience need to know about how these early days are going for Starmer and Reeves?
Oh, that's an interesting one. I think the thing that will be very interesting to see whether politicians of the left can handle what is basically a fairly austere approach that they're taking first. They're working on the assumption that they have a lot of political capital and that you do what you're supposed to do in the books, which is do the unpopular stuff first. Once you get in, get the nasty stuff out of the way. It's questionable how much political capital they have, because it's basically thanks to the exigencies of the British system that they won a landslide. They only got roughly a third of those who voted. We will see. Could be a very interesting dry run if we do actually have President Harris starting next year. She will probably have a fairly similar situation to deal with. Neither politician yesterday said anything at all about fiscal policy that I noted. The one thing that I think everybody I talk to in my day job, and at any rate, agrees on, is that fiscal policy is becoming a serious problem and that neither candidate will help. What you're seeing with Starmer and Reeves is people they're on the left, their aspiration is to spend more money arriving in office and deciding they need to rein things in, and we will see how it goes for them. But that will be a very interesting dry run for if Kamala Harris wins, which is still about a 55% shot at best, if you believe the prediction markets. Then this will be a very interesting experiment for what that administration will probably have to do.
I guess as we think about Vice President Harris, last night's debate was kind of an opportunity for the electorate to get to know this candidate a little bit better. What do we know about her economic plans, thoughts? It seems a little thin at this moment.
Well, it's to some extent. You don't, particularly in the US, where you have to negotiate with Congress. In Britain, where the budget is set in 1 2-hour speech, then it becomes much fairer to ask much more precise questions. We all know that in this country it's going to be a haggling process. It's going to be about the art of the possible. So I do think asking for great precision about exactly how much money they're going to spend. In Britain, you can actually spend exactly what you said you were going to. In the US, one should know that's not a totally deliverable promise. I am not happy about her economic policy, in that it's not at all clear to me that she really has a clear diagnosis of what needs to happen. On balance, personally, I'm more comfortable with her policy than with Donald Trump's, because I think particularly his ideas about tariffs and free trade are really, really bad. But it is too sketchy at the moment.
John Arthur's with us from Bloomberg Opinion. Thrilled he could be with us today on the September 11th, a remembrance here at 9:59 a.m. right at the top of the hour of a difficult moment at the South Tower. We do this with the market, S&P negative 35, Dow Jones Industrial Average negative 443. Authors wants me to quote the FTSE. I don't have it on the screen.
I don't want you to quote the FTSE.
The VIX
It's a pretty pointless index.
19.49. Paul Sweeney?
John, so as you step back here, and how important is this election to this U.S. economy, do you think, at the end of the day, and markets in general?
Oh, it almost certainly does matter very greatly, but not for the normal reasons. So monetary policy, I think, is, unless a Trump administration really tries to mess around with the independence of the Fed, for which there might conceptually be very good arguments, but which would really be dangerous, unless we actually get that, monetary policy is not really on the ballot at all. It's, Jay Powell is in power for another year and a half, and I don't think he's going to be particularly influenced by who takes over. I think where it matters most is on the tariffs, on the whole issue of how far America is going to try to take the deglobalization agenda. And on that, I do see reason for great concern that that a Trump administration could, if we're going to get the really big freak out by bond vigilantes that I and my ilk have been warning about more or less ever since Lehman, ever since the global financial crisis, the policies that Trump says he is interested in doing are close to what would provoke it. That has to be the greatest concern at this point, is that we will find out whether the bond vigilantes really are out there and how far they're prepared to go.
In your free time, I'm going to give you a story idea. I want you to run with it right now. John Arthur's with us, folks, with encyclopedic knowledge of the behavior of the animals of Wall Street in the city in London, and probably in Hong Kong as well. With these proposals by left administrations, less friendly to the elite, I see all these articles, we're going to leave, we're going to move, and all that. In London or Edinburgh, in New York or LA, wherever, where are all those fancy people going to move to if they decide they're going to move because of our modern politics?
That is a fascinating question. In the wake of Brexit, my best guess was that if the city moved anywhere, it would probably be Amsterdam and Paris, because any sensible person who's been to those cities will be only too happy to move to Paris or Amsterdam, and Dublin to a lesser extent. Really, the damage that Brexit has done in many ways is quite serious. There doesn't seem to be much in the way of people moving away from the London financial centre yet, which is really quite surprising. You have seen very eye-catching, obviously, Elon Musk moving from California to Texas. You've also have the example of people moving to Miami and then recognizing that maybe that wasn't such a great idea. There just isn't a financial center there yet. I'm not sure where people move. I think
where do they move? I'm fascinated, John, by this.
By where would people from?
Like, is everybody going to? Tyler Brulé over at Monocle decided on Zurich, but
my former colleague, yes.
Yeah, is everybody going to move to Zurich?
No, I actually quite like Zurich. It's not the most exciting place on the planet, and I don't think it has the basic infrastructure in place. It's a
Milan.
Great for soccer.
Yeah.
I don't see that either.
Well, aside from the financial services,
Paris would be the most conceivable one because of the scale of the city. There is far smaller than London, but there is a financial centre there. The likes of SocGen have always been quite significant.
But are the supporters of Brexit, are they still as supportive today, or with some hindsight, are they saying, maybe some of the things the other side was saying are true?
Okay, at the level, there is still a big element of pride going on here on all sides. Nobody wants to say they made a mistake. So, for example, the Nigel Farage angle is that Brexit was botched, that it could have been handled better. I think there is immense amounts of regret about how it's working out so far. Nailing my colours to the mast, Thomas told you I used to be a columnist for the Financial Times, which was vocally anti-Brexit, and I was perfectly happy to sign up to that. So that's where I'm coming from. That's my bias. Certainly you can find that if Brexit has hurt anybody, it's precisely the areas where they were most enthusiastic to leave. Fishing towns now discover that leaving the EU has been really, really terrible for the British fishing industry, for example, and they voted heavily for Brexit. Within the political elite or the business elite, the city, one of the more critical things that moved ahead of the referendum was the city decided that they didn't care if Britain left, that they were so unimpressed with the EU as an institution, and I have a lot of sympathy for that. It doesn't work well, that it wouldn't matter if they left. I think a lot of people in the city have shifted their views on that, and obviously some very prominent Brexiteers decided to leave the country, which is has a hypocritical issue to it.
One final question, John Authors. I had to go to the Irish Times yesterday to get an in-depth article on $13 gazillion at Apple Computer, taxes, it's an escrow, blah, 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 in that. But is that another symbol of Brussels, and I'll bring it over to the United Kingdom as well, but much more continental Europe, of just flat out their anti-tech, their almost monopsonistic tendency that you see in technology? Can they get their technological act together at CDG, at Frankfurt, and the rest?
It would certainly be great if they could. For little, basically at this moment, the list of significant European tech companies is SAP. That's pretty much it. Mario Draghi's report that came out
What'd you
earlier
think of
this
that?
week.
Glad you brought that up.
I personally agree with it. The main point he wanted to make, he made a lot of points about how European competitiveness has weakened terribly, and it started to happen roughly when the euro started in '99. Given that we now have monetary policy set uniformly across the eurozone, the hope at the time was that if we can agree on having the same monetary policy, everybody will just have to, they'll have no choice, everybody will have to converge on fiscal policy and industrial policy. That hasn't happened, and basically if you wanted a common monetary policy in the first place, you should by now have grasped that you also needed and wanted a common fiscal policy. That has very big, very reasonable issues concerning sovereignty, all the things that came to the fore in the Brexit debate in Britain, and you don't need to be a troglodyte, Luddite nationalist to have a problem with that. But basically, having gone so far, there is no point not taking the further step, which many people will find invidious. I think it needs to happen unless they give up on the euro, which is really difficult to do.
I hope that we can do this again. Long conversations with John Authors.
Always
It's like The Spectator or something. It's like one of those, 10,000
under new ownership, The Spectator.
Articles. John Authors, this has been really wonderful. Thank you so much. Writing for Bloomberg Opinion, I hope he does something like all the rich people complaining about this capital gain tax and that one. Okay, where do they go? To me, I'm just fascinated by that. John Authors, thank you so much. On this September 11th, it's been some short conversations with our valued guests, long conversations, generous conversations with John Authors and others. A CPI report, Paul, what did we say?
Yeah. I mean, you look at the core, Tom, on a month-to-month that came in at 0.3%. Consensus was 0.2%. So for some folks out there, that kind of takes the 50 basis point cut off the table.
Well, we'll have to see on that. I think the highlight of the day, to review this before, a moment of silence for the collapse of the South Tower in New York. We'll do that here in less than 2 minutes. Has been to see the images earlier this morning of Democrats and Republicans together with the vice president and the former president shaking hands.
Yes.
Was, as David Gura said, that was clearly a needed point after the debate last time.
Yes, so it was a poignant images, as it always is from Lower Manhattan on 9/11.
We will see. Right now, to slip a data check in here, it is a Dow negative 500, SPX at negative 40. The VIX was at an 18 level, a little bit of angst there, 19.56. But our attention now is to another moment of silence across his 23rd remembrance, his 22nd remembrance of 2001 and September 11th. There was a North Tower, a South Tower, and of course the falling of the South Tower. Let us listen now to a moment in New York City.
Though I never had the privilege of meeting you, Bart, I've heard of the incredible life you lived and the impact you made on those who knew you. I was robbed of the opportunity to have you be a part of my life. You would have been like an uncle to me, but your love for life continues to live on through the stories and memories shared. You will never be forgotten. We honor you today, and we will honor you always.
And my grandfather, Richard J.
Dignitaries still at 9/11, as you would expect. Paul Sweeney with good comments about the memorial, the huge success of the rebuilding of that. But to see former Mayor Bloomberg there, and of course his relation to this network and station with others, including former President Trump and President Biden as well. We say good morning to all of you. Bloomberg Surveillance.